start?
Yes.
Should we start? Okay. So
These are the CVs, but you don't need the CVs.
I don't need the CVs. No, I'm not going to introduce each of the speakers. It's okay?
Yes.
But I will read. So Klaus didn't trust me, so he wrote down everything that I should say. And usually I don't follow that. But in this case, he has written a really, really nice set of remarks. I don't know if you did it or one of your colleagues did it. Oh, you did it? Huh? Okay, it's superbly written. So I just wanted to use my opening remarks to briefly reflect on what we've learned about measuring land governance and why it matters. Now, so we're going to talk about the Doing Business framework, which was launched in 2003, which I think was a great innovation that led to measurable improvements in regulatory efficiency across dozens of countries, right? But there was a problem. The problem was that the questions that it asked were sometimes too narrow, and that narrowness had consequences that went well beyond the actual measurement of those concepts. So when a benchmarking framework becomes the standard against which a country's land governance is evaluated by investors, by rating agencies and others, it shapes not just what gets measured, but what actually gets done, what gets changed, what gets reformed. So over the 2 decades that the doing business, that we did doing business, and by the way, I'm a big fan of doing business. So I actually like the framework overall. But I also agree with the notes that Klaus gave me here, is that it created a tilt, even in the bank's own lending program, towards procedural efficiency and away from the harder, the slower, and more important, institutional work that determines if a land system actually functions for the majority of its users, right? The result was that there was a generation of reforms that were, in many cases, somewhat shallow. So essentially what happened was that countries built digital front ends on top of unreformed back-end systems, okay? So this reduced the number of steps to register, transfer, without addressing the fragmentation between registries and cadasters. There was a disconnection between land records and tax tolls, or it led to the absence of coverage in rural and peri-urban areas where most land transactions and most land conflicts actually occur. So women's rights, customary tenure, fiscal linkages, and data governance did not get the policy attention because they didn't appear on the scorecard, okay? This was not a deliberate choice. This is one of the unfortunate consequences sometimes when you have to come up with a methodology that you can implement for nearly 200 countries. So it ends up being a bit shallow, and sometimes it leads to consequences like this. Not always, though, Klaus. Not always. In this case, it did, right? And this, basically, it was the structural effect of measuring a narrow slice of a complex system and optimizing against that slice, right? Now, the thing, though, was, of course, at the time that we were doing the doing business exercise and so on, the constraints were also different, okay? So satellite imagery that is capable of supporting systematic mapping, mobile platforms for community-level data collection, interoperable registry systems, and the data infrastructure that is needed to link land records to tax rolls and credit systems, they have improved a lot over the last decade, okay? And they're improving every year, basically. And so we thought that the development of Business Ready, which is the successor and the better version of the Doing Business assessment, it actually provides a genuine opportunity to design something that addresses these problems that I just told you about the superficiality of these reforms and so on. So I think I've given, you've written a really nice thing, which I think we should have a blog on this one, because it's really superbly written. But I think that we'll actually share this with you, but I would really like to introduce the speakers next, right? So our first speaker is Valeria, who is sitting to my right, and she's the manager of Be Ready. And then we'll have Klaus. And because I don't trust them to keep time, I'll keep time myself. But each one of them, I think you get about 10 minutes, Valeria, I think? No? 15? Is it okay? Yes. Okay, all right. I still have to ask him. And then we have Klaus. After that, we have. Do we?
We will watch. Yes.
He's here.
We have a video.
Okay, so you have a video of Secretary Bharadwaj of the Ministry of Panchayati Raj, and then you have Denis Bashlik from Ukraine. You have Gabriel Carranza of Costa Rica, no?
Gabriela is.
Gabriela.
Yes.
Lo siento mucho. Okay. And then we have Johan Andres, you're right here. But we have a lot of things. So everybody has to sort of Jin Hu from Shanghai, and then Judith Nabakuba from Uganda, and then.
And Queen.
Huh?
Queen from South Africa.
I don't see it. Where is it?
I think she's. Sorry.
Where?
On this one. Sorry.
On this one, okay. And then we have Queeneth from South Africa, right? And Dorcas.
Yes, Dorcas.
So we have a lot of people. So which means that we're going to have to figure out a way to.
We will
try to keep it less than 15 because it means that you're going to. Yeah? Go.
They'll put it up in 1 second. All right. Mic is on? Great. Well, good afternoon, everyone. My name is Valeria Perotti. I'm the manager of the Business Ready team here at the World Bank. I'm really delighted to have the opportunity to present to you the Business Ready project, although today I'm going to focus on one topic in particular. Business Ready is the new corporate flagship report and data set of the World Bank that assesses the business environment worldwide. It does cover 10 topics that follow the life cycle of a firm. And today, I'm going to focus specifically on the business location topic. Behind this, there's a great team led by Jayashri Srinivasan, who is also here. And why is business location relevant for the business environment, and more perhaps interestingly for you, for research on land administration and property transfer? Well, we do measure several aspects of property transfer and land administration. Business location topic also includes aspect of building permitting, environmental permitting, but today I'm going to focus more on property transfer and land administration. Of course, we cover several areas, and I'm going to talk specifically why they matter also for researchers who work in this area. But first, I want to briefly explain the approach of the Be Ready project. The first important thing that I want to note is that differently from the previous Doing Business report, Business Ready focuses on private sector as a whole. And we don't take only the perspective of an individual firm and how easy it is to conduct business for that particular firm, but we take a comprehensive view, including considering the interests of potential entrant firms, of workers, of consumers, as well as the natural environment. The private sector has a key role, for example, for creating more and better jobs. Why? We know, for example, in developing countries, the private sector creates 90% of jobs and between 70 and 80% of investment, government revenues, and so on. But in order to thrive, the private sector needs the right business environment. And what Business Ready does is it emphasizes the very positive role that governments can have in establishing the right business environment that helps firms to innovate, to grow, and create jobs. So what can governments do to promote this favorable business environment? They can enact good regulations. They can eliminate bad regulations, of course. But they also need to provide the public services that firms and markets need to be able to comply with regulations and to operate effectively. Third, Business Ready also looks at how efficiently these regulations and services are implemented in practice. To really understand what good practices are essential for a positive business environment, we have some requirements for the type of assessment we want to do. We also have three main purposes. The first one is to advocate for reform. So our indicators, our data are very actionable, point at good practices that are either present or lacking in each economy. By the way, in December 2025, we released our second report that covered 101 economies. There are some copies around the table. I hope you can have a look. But second, we also want to inform policy by providing very granular, specific information about which are the practices that are missing. And also, very relevant for this audience, we want to provide data that supports analysis and research on the determinants and dynamics of private sector development. So our assessment needs to be quantitative. We need to produce numbers. We want these numbers to be comparable across economies, as well as representative of the whole private sector in the economy. So we don't focus only on SMEs or on large firms or on a specific sector, but we really capture data that's relevant and representative of private companies operating in the economy in different sectors, different sizes, different regions, and so on. So moving on to more specifics about data that's relevant for land governance research. Like all the other topics in Business Ready, the business location topic is structured into three pillars. So we first look at the regulatory quality. We call it the regulatory framework pillar. This is where we check whether good practices are implemented, enacted in the law. So it's de jure assessment. For example, we look at whether in a certain economy title guarantees are provided, as well as compensation mechanisms where there are errors in the registry information, whether alternative dispute resolution mechanisms are available for land disputes, what are the restrictions that may apply to either domestic or foreign-owned firms in terms of owning land or property or leasing property. Also, whether digital documents have legal validity. In the second pillar, which we call public services, we look at institutions, facilities that governments provide to support firms and markets. One very good example is the existence and the functionalities of the property registry and the cadastre, both at the national and city level. We, for example, measure whether due diligence can be conducted online, whether systems are interoperable, whether they talk to each other, particularly the registry and the cadastre, but also other systems such as from the tax administration or courts and so forth. Another important aspect is transparency of fees of information on time that is required to complete certain processes, as well as the availability of sex disaggregated data. Because again, if you cannot measure it, you cannot really act on it. The third pillar is operational efficiency. This is where it all comes together and where the experience of the firms is captured. And it's where we see how time-consuming or how costly it can be for firms to comply with regulations or to complete certain transactions. So, for example, transferring a property. We also have some subjective data, which I'm going to show you in a minute, about how firms perceive land access to be an obstacle for their operations. So this slide actually shows an indicator that basically ranges from 0 to 15, where the higher number means more firms are complaining about access to land being a major constraint for their business operation. So land administration really has a critical importance also for the business environment, because when land access is an obstacle, firms are less likely to invest in the country, to expand, and so forth. So this slide already shows where some gaps are at least perceived by firms, but we will see in the other slides that this is actually very consistent with the factual information that we collect. So Sub-Saharan Africa and Middle East and North Africa are the two regions where firms are more firms complain about land access as an obstacle. So then moving on to more objective data, one very basic aspect is the coverage that land registries and cadasters have. So this slide shows the number of economies, the percentage of economies in each region, which have a registry that covers under 50% of privately held plots. So this means number of economies that have poor registry coverage, basically. And here, the striking results is that 17 out of 27 economies in Sub-Saharan Africa have indeed registries that cover less than half of the privately held plots. Now, we have a similar statistic in terms of the coverage of the cadastre, which looks a bit better, but not for Sub-Saharan Africa. The percentage is actually exactly the same. And actually, just today, we advertised a policy indicator brief that was published, co-authored by Klaus, Jayashri, as well as Natalia Karkanitsa, who is also here, which actually shows that coverage is even more important than digital sophistication to remove obstacles for access to land. So that's really the very first step and the first policy message you can get out of this presentation, that coverage needs to be improved. Now, although coverage is not that great in certain economies, in certain regions, almost every country has a cadastre, right? But the information that it contains varies a lot across regions. So, for example, a good proportion of economies that have a cadastre also provide ownership information that comes from the property registry, but much fewer provide also cadastral information, make it accessible publicly. And where a really big gap is on the availability of tax value information, which requires more integration of different platforms and different systems. In fact, interoperability is really a critical gap. We can see that there are good practices adopted in the registry or in the cadastre. For example, 85 economies out of 101 use GIS systems, 78 use a unique property identifier. But when it comes to integrating registry and cadastre, only 45 out of 101 have this integration, and even fewer, 28, integrate the registry with other government services such as the tax administration or courts. Also, public availability of this information is generally high, but it shows large variation across regions. I wanted to also mention how the information is stored. So digitalization is, of course, an important aspect to promote transparency, efficiency, reduce errors in the registries and so forth. But we see that this is very much an income issue. And in low-income economies, there is still a very large percentage of economies that rely exclusively on paper. This is less the case for cadastral plans than for property title certificates, but it's still very much there. Now, there can be exceptions. So, for example, among low-income economies, Rwanda is a good example where cadastral plans are fully digital. And you also have not so good examples from the high-income economies where cadastral plans are still paper-based for economies, for example. Now, digitalization can be interpreted in two different ways. One is digitization of data, so the fact that you can search online for information, for example. This is pretty much available in the vast majority of economies, 80%. But only 25% of economies actually allow to complete the property registration transaction online. So that's a very big difference from moving from digitalizing information to digitalizing processes. Now, sorry, I think I skipped one. Okay. One aspect that we measure is also restrictions, particularly for foreign firms, to own or lease property. And we see that foreign-owned firms have more restrictions. Of course, these might be justified by arguments of national security, environmental protection, and so forth. However, of course, this can discourage investment, and so we see that there's widespread restrictions across regions. Now, last maybe 3 points. One is about title protection. This is also a very important issue that firms will consider before they decide to invest, to invest in property. It also affects the ability to use property as a collateral, so affecting access to finance as well. And here we measure two things, whether there is a registry guarantee and whether there's a mechanism for compensating losses when there is a mistake in the registry information. So 11 economies provide both, that's great, but actually 2/3 of economies don't have either one of those. So that might create a loss of uncertainty and discourage private sector from expanding and investing in the country. Now, we might have the unfortunate case when a land dispute arises. And the good news here is that 87% of economies do provide some sort of alternative dispute resolution mechanism with more prevalence of mediation than arbitration. But there are still, for example, 13 economies where only courts are available to resolve land disputes, and that might affect the time and the cost that it takes to resolve them. Very last slide. I wanted to talk a bit about efficiency. We discussed how doing business was very much based on this idea. Of course, it was a good idea. We just complemented it with a lot more information. But we also provide information on how costly and how time-consuming it is to transfer property. And we see countries all over the place. There are countries where transferring property is fast, but it's costly. Countries where it's slow but affordable. The countries where it's slow and costly, and a good practice cases where it is both fast and affordable. So I hope I've got you interested in our data. Everything is available on our website, so please do explore it, and I hope you can use it for your research. Thank you.
Excellent, Valeria, and you were spot on time. So I want to hear from Klaus first whether he's happy with the changes that Business Ready has made or not, or are you still unhappy?
I am always happy. So I think I'm the most happy person. And I think, so I'll talk a little bit about how to take that to action, which I think will be, and but before doing that, I would like to appreciate the great collaboration with the Business Ready team, and also I think the partnerships with all of the people, all the organizations, especially IPRAS in there, the Regional Center for Mapping and Development, the European Land Registry Association, and the International Federation of Surveyors, which I think without their collaboration, we wouldn't have been able to actually do that and put that together. I will focus on 4 areas why effective property registries are needed: coverage, trustworthiness, private sector data access, and efficient property taxation. I think I will present some data which we have been collecting together with all our partners, but I will be very brief because INDEMIT is already watching the time, so I don't think I have to tell anybody in this room why coverage of private land is very important, I think, and also Valeria has already talked about that a lot, and that is very limited in Africa. But I think one thing that is, and that we're doing, that Business Ready has now been incorporating, is that coverage of public land is equally or even more important, especially in developing countries, because you often, if you focus on registering individual land, you may actually encourage encroachment on peri-urban land of high disaster risk that reduces resilience. You may have fragmentation and speculative land acquisition in rural areas, especially if you don't have property taxes on agriculture, which is very widespread. You will have delays in investment to boost future growth. And of course, I cannot be in a session with Indamid without mentioning the middle income trap and the ability to attract transformative investment who need legal certainty. I think you will not do that if you don't know where your public land is and how you can actually dispose of that. I have some measures both of the coverage and also about the transfers of public land. I think Eastern Europe has 61% of countries who actually transfer public land through e-auction. I think that is completely transformative. We have yesterday already heard a presentation by Prosoro from Ukraine, and they will do another presentation of their hands-on presentation of their online auction platform, which I think has completely transformed. And I think the minister from Ukraine will probably also mention that in his the disposal of public land and the revenue that local governments are actually getting from that. And of course, that is contrasted. So I think we have a lot of potential actually for experience sharing. And of course, that is exactly why we have this conference, that we actually bring people together. Of course, you also, if you don't have the registry that is trusted, no markets will emerge. And we know very well that this is, in the end, what we want. So, and of course, registry and cadastral layer are part, as we have heard a lot, of digital public infrastructure. So it needs to be authoritative rather than just something that is paper. And I think paper records that are manipulated without auditable processes are very much insufficient. And the connectivity of benefits from private sector contracting without digital authentication, you cannot actually do that. So I think that is absolutely critical. What we see is, just let me give you two figures. One is where countries, and that again is a very low-hanging fruit of reform, and I think one where the doing business ready, sorry, I cannot even, is already very much on the ball, that we have a big gap between the countries where e-signatures are actually that have digital signatures in place, but that do not actually make that mandatory for their registration system. And that again is something, it's a very easy reform to do, and it is something which can be transformative, because then once you have an audit trail, you can actually make that very much transparent. The third point is interoperability. I think digital ID is needed to link to people to land. And of course, a two-way link to the civil registry can resolve much of the record maintenance issues that we have observed, and that has been a lot of discussion here even yesterday, that people cannot update, because if you have the civil registry link, you know when somebody passed away, so you can actually put a flag into your land registry. So that can, and of course you can then, if you have the digital ID, you can unlock data sharing and with many other registries that have this digital ID. Again, there is huge potential for actually capitalizing on that. Just a simple reform, and it's just an IT solution that you have your civil registry linked to the land registry. The third point is the access to machine-readable registry and cadastral information. I think Valeria mentioned that a lot of countries have restrictions on land transfers in place. These restrictions are they're mostly from the 60s and the 70s. They're completely outdated, and they miss the point completely and may actually have unintended consequences. I think Ukraine is a wonderful example for that. And if you have targeted regulation, but of course for targeted regulation, you need to have information information on prices. You need to be able to regulate the market in a way that is intelligent rather than just having these blanket restrictions. Again, if you have access to machine-readable data, you can actually do that. That also, if the private sector has access to this data, that increases market liquidity and efficiency, allows people to launch new products, both in insurance, fintechs. I think we have seen a lot of innovation there. But of course, that cannot happen unless you actually have access to the data. And of course, it's not possible to link to remote sensing. I think Brazil is a very good example where the use of remote sensing has been transformative. And of course, since the WDR is on AI, I think you cannot have localized AI systems if you don't have machine-readable data. So again, I have some data on this. I will drop that. But let me go to the last point, which is property taxation. We all know that it's a key part of the social contract, and it is needed for effective decentralization, where local governments invest to increase land values, and then they derive the benefits from that, and they compete with each other in doing so. The integration with the registry, and of course, I think one thing that is often overlooked is that for urban areas, if you have every year a record that somebody pays their taxes, that will solve your updating problem, because nobody will pay taxes if they don't actually occupy or use that land. So that solves the updating problem, and it's also a very simple way of increasing coverage, because I think, and we saw in sub-Saharan Africa, coverage is very low. Using tax records and allowing them to actually mature into ownership records is one of the easiest way of fixing that. And therefore, I think that is very much something that is an area of reform. And of course, I think very many local governments collect much less because they have a very inefficient administration, and instead they rely on very distortionary and inferior transaction taxes, which are very popular but also very distortive. There are a lot of opportunities, and I don't want to go through that. I think, okay, thank you in the mid. I'm getting an additional minute, so I think, one thing that we were very surprised about ourselves is that, especially in sub-Saharan Africa and also MENA, and also South Asia, the local government share, which means what local governments actually get from property taxes, is very low, below 50%, which of course undermines completely the incentives, because if you're mandated to collect but you don't get the revenue, why would you spend any effort in doing so? So again, that is a reform that is very simple. Second is that in many of these countries, more than two-thirds in South Asia, and about between 50% and 60% in Africa, the tax roll is separate from the cadastre, which of course doesn't make any sense, because you collect the same data twice and you create confusion among property owners. And the third one is that the valuation, I mean, these days you can do computerized valuation very easily based on market prices. But most of the countries, especially, and I think East Asia is also very interesting there, do not update their valuation rolls take more than 5 years between updating valuation rolls. And of course, that is also a way of losing revenue. So again, it's a very low-hanging fruit. You just need to put in place the regulations and the conditions for doing so. So I think that means that we actually do have an actionable reform agenda in terms of increasing coverage, not only of private, but also of public land, and the transparency in its disposition, make e-signature mandatory for all registry transactions, establish a two-way link to the civil registry and to the digital ID as a basis for broader interoperability, make prices and cadastral registry data available publicly, subject, of course, to privacy rules, but I think there are many countries that do that, clarify data ownership and data consent management, which I think is a big in terms of, because in the end, data is very valuable, so you want to make sure that users own the data rather than institutions who collect this data from the users. Enhance the capacity for effective property tax collection and retention by local bodies. And of course, all of these are feasible reforms that can be supported with policy lending. So there's a big digital agenda that can, and especially since our digital teams are now investing a lot in last mile connectivity, linking these investments in last mile connectivity to actually these reforms, I think would be a very feasible agenda for the bank to advance that. And of course, I think this can be then tied to subnational competition. And I think one thing that is very important and that we see in every country, and of course, I think I didn't mention that in most countries from India to Brazil, land is a subnational responsibility. So I think it's the states or even below that. So again, and what we see in all of these is that subnational states or local governments have been the drivers of innovation, and that innovation has then been adopted in other settings and spread throughout the country. That is where serious and impartial research, and of course, is very important to distinguish innovations that are truly revolutionary from political rhetoric, which also is very prevalent in the sector. And of course, Be Ready is very much well positioned to objectively compare the performance and assess that. And in that context, we very much appreciate the collaboration.
So now you've answered my question.
Okay.
You are happy with it.
Yes, of course. So with that, thank you very much. I think given that we are a little bit pressed for time, I will first play a video from the Secretary Panchayat Raj. Okay, now I messed it up.
And thank you for this opportunity. Governments all over the world implement programs
Sorry.
to provide. Good afternoon, and thank you for this opportunity. Governments all over the world implement programs to provide health, education, livelihood opportunities, skills to their people. But is there any program which makes people rich? The Honorable Prime Minister realized in large parts of our country, in the rural areas where people have their homesteads, there were no formal land records. Recognizing that this would create economic transformation of the rural areas, the Honorable Prime Minister launched Swamitva as a pilot project in 2020. The process involves survey of these areas through drones, ground truthing of the draft maps, georeferencing, and then community participation. So once the maps have been prepared through drones, they are shared with the community after ground truthing, and then if there are any objections, if there are any differences, they are resolved through the community. Therefore, there is huge community acceptance of Swamitva. What has been the outcome? We have surveyed through drones an area of 70,000 square kilometers, which I'm told is about the size of Ireland. More than 1/3 of a million villages have been surveyed, and more than 31 million property titles have been distributed. What has been the impact of Swamitva? Land to the tune of about $1 trillion has been monetized. Even though it's early days, more than $1.6 billion worth of credit has been availed by about 10,000 people. The Indian Institute of Management at Ahmedabad, with the active support of the World Bank, has conducted a study of the impact of Swamitva. While I will leave the details to Klaus, it is apparent that it has a huge impact on formalization of land titles, on credit offtake, and of course, local body finances. I believe that the experience of Swamitva is instructive for other countries also, which are similarly situated. And we would be very happy to share our experiences with them. Thank you again for this opportunity.
Thank you. With that, we turn it over to the very rich panel of, so I think that already illustrates that there is a lot of good experience that is worth sharing, and we thought we bring some of the champions of who have been implementing key reforms together in this venue. So we start with Deputy Minister Denis Bashlik from Ukraine, who unfortunately, given the situation in the country, will be joining us through video because traveling is too difficult. We'll then go to Gabriela Carranza Araya, who is the director of the Registro Inmobiliario in Costa Rica. We then go to Johan Andres Avendaño, Avendano Arias, who is the technical director of IGAC, the Instituto Geográfico Agustín Codazzi. Then we go to Gwyneth Cornile, I hope I pronounced your name correctly, who is the acting director ICT and enterprise architecture at the Deeds Registry in South Africa, followed by Chin Hu, the director of the Shanghai Land Reserve Center, and last but not least, my sister from Uganda, the land of Milo tenure in Dorcas Okalani, the PS of of Ministry of Lands, Housing and Urban Development. With that, I think, Dennis, you're here. The floor is yours. Thank you.
Yeah, hello everyone. I'm really happy that today Klaus presented us as champions of some good cases of land management, because almost 10 years ago we were presenting our drafts how to manage the land reform in Ukraine, and because unfortunately Ukraine has one of the most complicated and long-lasting land reforms. And here I want to say that our experience shows that if the reform is really complicated and you see that it's really long, it is totally understandable that you should do and start that with really small steps. For example, thanks to the World Bank Group, thanks to their experts, we started it from providing land monitoring, introducing land monitoring, and started publishing prices for the land. And then we moved step by step, and today we have the possibility to present, I think that not bad achievements and our future plans that we are having on the nearest future. Can we share and show our presentations, please? Klaus, do we have presentation here?
We don't have a presentation for you.
You can share it from your side.
Okay. Just, I'm really sorry. I thought that it will be. Yeah.
So I'm supposed to be the timekeeper here, and so I'm going to sort of push you along a little bit. Yeah. Okay.
Don't hesitate to push me. Just a moment.
Is it the same as yesterday?
No. Another one.
Okay. No. Or should we? Maybe we go to Costa Rica while he joins? Yeah, I think. Pardon?
Yeah. I think now I'm here, and you probably will see the presentation right now.
Yes.
Yeah. Do you see that?
Okay. Yes. You can share your screen?
Yeah. Is it okay?
Yes.
There you go.
Okay.
Yes,
yeah.
it works now. It works now. Yeah.
Yeah. So I already started telling you about the land reform. I just want to go really briefly because of the lack of time. Ukraine's land market has been opened in 2021, and as you can see on this slide, the prices are growing really significantly for the last years. Now it's almost two times from the start that we had. Ukraine didn't build the land market from the scratch. The land market was built on a strong digital foundation. Since 2013, Ukraine has established, first of all, a well-developed state land cadastre, a public cadastral map, fully digitalized land services, public land relations monitoring portal, and national spatial data infrastructure. I want to mention here that many of these products has been developed together with the World Bank Group, and as the Ukrainian government, we are really grateful for the support that World Bank has provided. First of all, the public cadastral map. It provides visual access to land data. It allows viewing parcels, boundaries, seeing cadastral numbers, access geometry, and land use. It supports search by cadastral number, navigation, and zoom and visualization of different data layers. Currently, unfortunately, public access is restricted due to martial law, but the system continues to function for official use. The next thing that we have is the portal of electronic services of State Geocadastre. This portal is being administered by State Service of Ukraine for Geodesy, Cartography and Cadastre and provides digital land administration services for the public. It totally relates to the first presentation when the speaker describes two processes, the digitalization of the data and the digitalization of the process. This is one of the examples of the digitalization of the process that we have in land registration. The next thing is where we started, as fact, the process of empowering the land reform. It's providing the public land relations monitoring. It provides analytical data on land relations, including land market indicators, transaction volumes, land prices, and it also provides analytics on ownership structure, land use, water and forest land data, land taxation, and a lot of other data. I will not stop here. The next milestone is the National Infrastructure of Geospatial Data, NSDI, or how we call it in Ukraine, NIGD. It's also the portal based on EU-inspired directive and principles, and it integrates spatial data sets across central government and local authorities. And it serves right now as a central access point for spatial, environmental, and infrastructure data that we have right now. We had a lot of problems with standards of data, but now we are moving really smoothly because, frankly speaking, it was really hard to start. To make everyone to do everything according to the newly adopted standards. The next thing is State Agrarian Registry. It is the central repository for agricultural production data and the system for administering support programs, which was launched in 2022 in the year when the full-scale invasion in Ukraine unfortunately started. As of now, it includes more than 200,000 of users and more than 170,000 of active farmers, which are working on 20 million of hectares of land, and it covers right now about 80% of cultivated land in Ukraine. And we are working actively in order to make it, it is impossible to make it 100%, but we are moving smoothly to make 90% this year. State Agrarian Registry is interoperable with the key state registries, including a National ID, Registry of Legal Entities, Registry of Rights, Cadastre, and the other registers like Taxation Registry, Register of Sanctions, Animal Registry, and so on. This slide shows key operational indicators of State Agrarian Registry. It is the key instrument for distributing right now public support in agriculture to verified beneficiaries. In 2025, over 80% of public agriculture support was delivered through SAR, and right now, it started from agriculture and all other spheres of economy. They trying to use the model of State Agrarian Registry in order to distribute their support and services to their spheres. The next thing is unique identification of farmers. The farm registry, it's much more related to EU requirements, and it is not so related to land relations, so I won't stop here. The next thing is remote sensing in State Agrarian Registry. SAR uses satellite-based crop maps for eligibility, verification, and monitoring of farm activities. The nationwide crop maps derived from Sentinel satellite imagery and overlaid with cadastral parcel boundaries to verify actual land use and are displayed on the map in Farmers Portal. The next and the newest product that we launched is BI portal that provides public access to SAR data in disaggregated, depersonalized mode. It is very important, especially due to martial law. It includes analytics on farm structure, land use, support programs, and livestock, which are highly relevant for local governments, international donors, and policymakers and researchers. The next thing is SAR crop statistic model. This model has been developed by the ministry with the World Bank support to provide crop statistic at national level. It shows crop structure by region, season, farm. It includes an interactive map with parcel boundaries, crop classification, search functionally, and it also detects geometry mismatches, inconsistencies in land use, and unregistered and misused land. Frankly speaking, when we compare the data that we have on this portal with the traditional statistics, in many cases it differs in 50%. So if we speak about the next steps, the next step focuses on EU alignment and system development. Key priorities include piloting and scaling a land parcel identification system, geospatial application, and area monitoring system. Also expanding data exchange with registries to improve farm classification in line with EU requirements, control of beneficiaries, and completeness of farm data. The goal is to develop SAR into a system aligned with EU IACS requirements and making all the process totally automated in order to reduce possibilities of human impact, corruption risks, and making everything really, really transparent. So thank you. That's all from my side.
Dennis, thank you so much for this. I know you stayed up late, but you made it worth our while. Thank you so much. So over to you, Gabriela. But because you're not staying up late, you only have 5 minutes. Yeah.
So, excuse me. So she will speak in Spanish, and I'll translate for her. Okay? So please be patient. She will talk, and then I'll translate.
Ok, buenas tardes. Es un gusto para mí estar acá compartiendo con ustedes en este espacio una breve presentación. Vamos a tratar de mantenernos dentro del tiempo. Permítanme iniciar con una idea central. Creo que todos tenemos claro, todas y todos tenemos claro, que los sistemas de administración de tierras no constituyen únicamente infraestructuras tecnológicas. Son ante todo puentes. ¿Puentes para qué? Para el desarrollo económico y social. La seguridad jurídica en la tenencia de la propiedad inmueble constituye entonces un presupuesto esencial ¿para qué? Para el acceso al crédito, la atracción de inversión y la generación de empleo. Pero igualmente en nuestro país hemos advertido que es necesario que este sistema funcione de manera inclusiva, garantizando un acceso amplio, equitativo y oportuno a la información, a nuestra información. En el caso de Costa Rica...
You want to translate now? No, it's good. Oh, it's okay.
I'll lead a summary.
A little slow.
Yes. So thank you for the opportunity. Gabriela was mentioning that all of us know that land administration is not only infrastructure, and special data infrastructure is a bridge. Land administration, good land administration is a bridge for socioeconomic stability and development, and it had access to another services like investment, jobs, access to credit. And in Costa Rica, it's very important, according with this in mind, to have access to the cadastral data.
Costa Rica cuenta ya con un marco institucional y tecnológico consolidado. El registro inmobiliario es el órgano competente que tiene a cargo la registración y la publicidad de los actos y contratos inscribibles, asegurando su oponibilidad y la eficacia de los derechos reales inscribibles. Por su parte, el uso de la información para fines tributarios, para la administración del territorio, la protección ambiental y la gestión del riesgo corresponden a otras instituciones públicas con competencias especiales en la materia, con base en la información oficial que nosotros les proveemos, a partir del mapa catastral. En consecuencia, en nuestro país, el desafío actual no es la construcción del sistema, sino su activación plena, particularmente mediante el fortalecimiento de la interoperabilidad y el aprovechamiento efectivo de los datos. Ello se vuelve relevante en el contexto del cobro y recaudación del impuesto sobre bienes inmuebles, como fuente de financiamiento para el desarrollo humano a cargo de las municipalidades.
So in Costa Rica, the cadastral data has a great coverage, almost 100% of coverage. The challenge now is the use of that data by different stakeholders, especially municipalities, and for different purposes. The first one, the fiscal purpose for the property taxation and for strengthening local revenues at subnational level. The second one for territorial development, which includes disaster risk management, and also for infrastructure development. So then, again, she emphasizes that it's not only having the data completed with complete coverage, but giving the access and use of that data for different stakeholders, especially the municipalities.
Costa Rica ha desarrollado un modelo de administración de tierras consolidado e integrado. El antes registro de la propiedad y el catastro nacional operan ahora bajo una misma institución, el registro inmobiliario, lo que ha permitido avanzar hacia una verdadera concordancia entre la información jurídica y la información gráfica. En este año 2026, nuestro país alcanzó la cobertura catastral completa en los 494 distritos, consolidando un mapa catastral oficial que integra la descripción física de los inmuebles con su situación jurídica registral. Este modelo, como indiqué, se sustenta en el principio de concordancia, eje fundamental del sistema. Asimismo, contamos con un alto nivel de digitalización, con servicios electrónicos integrales y acceso en línea a la información a través de 3 sistemas: CIRE, ZIP y Siri. Yo siempre digo nuestro Siri, no el de Apple Siri. Todo ello ha permitido la implementación de un sistema que se basa en un identificador predial único, el estándar en la utilización de la información y la transparencia en el acceso de los datos. En términos comparativos, nuestro país tiene un desempeño sólido en indicadores internacionales, lo que permite consolidar nuestro sistema.
So in Costa Rica, they have unified some years ago the cadastre and registry, the property registry, in a single entity. So that has allowed the country to have not only the complete coverage, but also the fully harmonization between the cadastre data and the property registry data, which means the physical aspects and the legal aspects of the property. They have 3 different systems that allow for having e-government services on cadastre and registry for the citizens, and they also have a unique ID, because it used to be a problem that each parcel has a different ID for cadastre and for registry, so now they have a unique one.
¿Qué tenemos por resolver? Nuestros desafíos son claramente de segunda generación. En materia tributaria, necesitamos un marco jurídico que permita la implementación de modelos de valoración masiva, lo que no tenemos en este momento, y limita el aprovechamiento de la información en el ámbito de la gestión fiscal municipal. Si bien tenemos integración institucional, estamos claros que la interoperabilidad puede ser fortalecida, particularmente en cuanto a la integración de nuestros sistemas en un único sistema. Y en tercer lugar, pues identificamos oportunidades para ampliar el acceso a la información mediante mecanismos de intercambio estructurado de datos con interfaces para terceros, tanto instituciones públicas como privadas.
So what are the challenges ahead after having this complete and unified cadastre registry database? Is the use of the information and to give broaden usability to that data. So there are 3 challenges ahead. The first one is the legal framework to allow mass appraisal for fiscal purposes and to improve the local revenues of municipalities. The second one is the interoperability between the cadastral registry with the fiscal databases. And the third one is to broaden the use of the cadastral registry data for other purposes.
Requerimos entonces profundizar en la integración del catastro con otras capas de información territorial. Los procesos de planificación y gestión de riesgo no están aprovechando de manera sistemática la información catastral que nosotros brindamos, de manera que en síntesis el desafío no es generar la información, sino es utilizarla efectivamente articulándolo en la toma de decisiones públicas que nosotros tenemos. Nuestra agenda entonces se orienta a potenciar el uso estratégico de nuestros sistemas de información, fortaleciendo el marco normativo y operativo para la interoperabilidad y para profundizar los procesos de digitación, avanzar hacia un sistema que cumpla con los estándares internacionales y que permita consolidar de esta manera nuestra información para promover modelos de valoración masiva y también el uso de tecnologías mediante imágenes satelitales que permita fortalecer entonces, por ejemplo, el monitoreo del suelo y apoyar la planificación territorial, la gestión ambiental y la prevención de riesgos. En definitiva, nuestro objetivo es consolidar el mapa catastral como una infraestructura pública esencial para la toma de decisiones. Ya en Costa Rica el desafío no es cómo construir la información, sino es cómo utilizar un sistema de administración de tierras como el que tenemos. Buenas tardes, muchas gracias.
So the challenge ahead of final is to make the cadastral database, the cadastral and registry database, a public infrastructure database for different purposes. It's a second generation problem for different purposes: fiscal, disaster risk management, territorial planning, and better policy making. Thank you.
Excellent presentation, excellent translation. Johan.
So we will do the same thing. He will speak in English and in Spanish, and I'll translate.
Gracias, buenas tardes. Mi nombre es Johan Avendaño Arias. Vengo del Instituto Geográfico Agustín Codazzi de Colombia, en compañía con el director general, el doctor Gustavo Marulanda, quien se encuentra aquí a mi izquierda.
So Johan is from Instituto Geográfico Agustín Codazzi, the Cadastral National and Mapping Authority of Colombia. So he's presenting, and here is the general director of that entity,
Ok, vale, listo. La presentación.
Mr. Gustavo Marulanda.
Ok, dale. ¿Y la presentación? Bien, vamos a empezar mientras tanto. Queremos dar un contexto muy breve, y es que en el año 2016 Colombia ha firmado un acuerdo de paz con una guerrilla buscando buscar la pacificación de las zonas rurales. De ese acuerdo de paz surge el compromiso de hacer el censo catastral de las zonas rurales para poder identificar los propietarios que habían perdido su propiedad. Allí aparece el primer reto: hacer el catastro rural.
So in 2016, Colombia signed a peace accord, and one of the key topics of that peace accord was conducting the cadastral survey for the rural areas, those that were especially affected by the conflict, and that's when this journey started.
Sin embargo, el problema interesante apenas empezó, porque, como estamos viendo en las imágenes, una cosa nos dice la idealización del modelo y el otro la realidad de los datos geográficos. América Latina se caracteriza por este conjunto de imágenes plurales que no quiero describir, quiero dejar que cada una de ustedes la reflexione, porque no tenemos ciudades idealizadas ni ruralidades idealizadas, sino un conjunto interculturalidad de territorios a los cuales tenemos que hacer un catastro inmobiliario.
So the cadastre has to really be able to have the inventory for different realities, as the pictures that you can see at the screen.
De manera puntual, Colombia no se limita a la dualidad campo-ciudad. tuvimos que pensar además dos categorías adicionales, no solo catastro urbano, no solo catastro rural, sino también catastro indígena y catastro para tierras de población afrodescendiente que tienen protección constitucional.
The country reality goes beyond the dichotomy of urban and rural areas. It includes territories of indigenous and Afro-descendant communities, which accounts for 30% of the territory, and also a large percentage of protected areas.
Y como quinto elemento, tuvimos que pensar ahora un catastro verde o un catastro ambiental.
And then, according with the importance of the environmental services in Colombia, also having the angle of the green environmental cadastre.
Así que aprovecho la publicidad para invitarlos a que conozcan estos 5 tipos de tierras de mi país. Bien, el catastro tiene un fin específico y es apoyar la reforma agraria. Colombia tiene el índice de concentración más alto de América Latina, que gira en torno a 0,89. Además de ello, el 1% de la población propietaria es dueño del 48% de las tierras privadas del país.
So, on top of those challenges, Colombia has a high land concentration, one of the highest in the LAC region. The Paraguayans are saying that they have a higher one. So 1% of the owners have 48% of the private land in the whole country. And there is also disputes in areas affected by deforestation.
Para avanzar, hemos tenido que generar transformaciones institucionales, hemos generado un nuevo ecosistema para la gestión catastral. Tenemos una autoridad nacional, el instituto el cual yo represento hoy, y un conjunto de 45 subinstituciones subnacionales para hacer el catastro.
So now Colombia has a hybrid model when there is some municipalities with low capacity where the cadastre is centralized in IGAC, and some other municipalities has a decentralized cadastre.
Al tiempo, hemos avanzado en la formación de cerca de 10.000 campesinos, indígenas y afrodescendientes para que nos acompañen en el proceso de recolección de información catastral en las áreas rurales y étnicas del país.
So to conduct this massive cadastral survey, more than 10,000 people from indigenous and rural communities has been trained as parasurveyors.
Además de los cambios normativos e institucionales, hemos avanzado en la implementación del modelo LADM, teniendo una innovación sobre los modelos de levantamiento, modelos de tercer o cuarto nivel, y hemos tenido la necesidad local de crear modelos específicos para levantamiento de información indígena y afrodescendiente. Aun cuando pareciera simple, quiero contarle a este auditorio que esos modelos han sido producto de una negociación política de más de 6 u 8 años con las organizaciones étnicas de mi país, que representan el 40% del área territorial de Colombia.
So all those changes imply an institutional modification reform with the decentralization, and also a legal reform, a technical reform, which has been achieved through the adoption of the land administration domain model international standard, which has been customized for Colombia, including a model that goes for indigenous and Afro-descendant communities, and which together the indigenous and Afro-descendant communities account not for the 40% of the Colombian territory, and has a specific model. This after 6 years of coordination and a prior consent with the indigenous and Afro-descendant communities to have a land administration domain model that suits their needs.
Así, en los últimos 3 años, bajo el liderazgo del doctor Gustavo Marulanda, hemos logrado llegar al catastro del 40% de Colombia, entendiendo que no son tierras homogéneas y que hemos tenido que adaptar métodos directos, indirectos, colaborativos y participativos para obtener la información catastral del país.
So in the last 3 years, IGAC started from a coverage of the cadastral survey from 9%, now accounts for 40% of the territory under this administration.
Okay. Y bueno, los métodos de recolección de información.
With different collection data acquisition, which includes visits to the field, but also data interoperability, and also in areas affected by conflict, people can really have like social mapping to show where the land goes.
Bien, para ir terminando, queremos entonces sintetizar un poco los datos que anteriormente mencionaba. Hemos avanzado en el 40% del área del país, 44 millones de hectáreas sobre 114 millones de hectáreas que tiene Colombia, 326 municipios y aproximadamente el 55% de la meta que políticamente nos ha puesto nuestro presidente.
Then you can see the figures there that are in English. So 40% of national coverage, it's 44 million hectares, 326 municipalities, and it is a progress of 55% of the target that the government has really put as a, has set as a target.
Y uno de los retos ya para terminar está asociado con cómo vinculamos la información del catastro con el registro, al igual que en algunos países tenemos dos instituciones distintas. Hemos logrado crear un sistema después de muchos intentos que se denomina SICRE, en donde podemos hacer un monitoreo para cerca del 70% de los municipios del país y conocer la realidad registral con la realidad catastral, pero aún tenemos mucho camino por recorrer al respecto.
As all like countries, cadastre and registry, except with some like Costa Rica, with a good example, cadastre and registry are two different entities with different IDs, but after all this effort, the cadastral and property registry data interoperability has achieved 60% of progress and is work in progress to complete 100%.
Al igual que mi colega de Costa Rica, tenemos un reto fiscal. Justamente hemos tenido movilizaciones ciudadanas en donde el hecho de haber dejado muchas décadas desactualizada la información catastral hizo que la ciudadanía perdiera el hábito de poder informar el valor de sus propiedades y tenemos que trabajar más que en procesos de infraestructura técnica, en una cultura ciudadana catastral y en una ciudadanía geográficamente habilitada.
So the challenge is the use of the data for fiscal purposes, for instance, for strengthening local revenues, and it implies really working with the communities about the importance of paying those taxes and with the municipalities also for being able to collect that property taxation.
Ok, y por último, los últimos dos retos están orientados a la inclusión permanente de las tecnologías y de la inteligencia artificial. Hemos avanzado mucho en ello, aun cuando los retos geográficos de mi país hacen que debamos tener unas métricas de medición distintas a las que se utilizan en Europa y en Estados Unidos. Y por último, nuestra preocupación ahora es cómo vamos a generar modelos de mantenimiento y sostenibilidad de largo plazo de la información catastral.
And then it will be important for IGAC to continue working in this data coverage, but also in data maintenance, use that data, and use of the disruptive technologies to maintain that data updated and to complete the coverage of the country.
Okay. Cerramos diciendo que hemos venido trabajando por la creación de un emblema que se denomina Geografía para la Vida, es decir, el uso de la información geográfica, catastral, registral al servicio de la solución concreta. En mi opinión personal, la falla de los sistemas no es porque no tengamos tecnología, es porque la ciudadanía no sabe para qué utilizar esos datos y si el ciudadano no sabe para qué usarlos, es muy difícil que pueda defender la financiación y la puesta en la agenda pública de este tipo de necesidades para nuestras entidades.
So finally, the access and use of that data by the citizens, by the municipalities, it's also important and it's one of the also working lines that IGAC is envisioning.
Okay, muchas gracias.
Thank you.
Impresionante. Thank you. John, thank you very much. So all of these are so all the presentations are very good, but the quality of the chair is terrible. I think. Anyway, go on. Ujjain, you go first. Are you next? Oh no. Okay. Okay. Oh, I thought
sorry.
okay. Oh, all right. Good.
Okay. Good afternoon. South Africa is 6 hours ahead of time in America, so my slide you will see at 9 o'clock this afternoon. I am Queen Kanyile. I am from the Deeds Registration Trading Entity, which is under the Department of Land Reform and Rural Development in South Africa. This Deeds Registration Trading Entity is led by our Chief Registrar of Deeds South Africa, Ms. Khalees Nussen. I think you would have seen her being generous with the pamphlets. It has 11 deeds registries across South Africa, and it combines it combines the national policy oversight in terms of their property. From a deeds ICT perspective, digitalization alone is insufficient without, at number one, digital coverage. We are talking about the digitization, the scanning of our physical hard copies that date back to 1800s. We're talking about electronic lodgement, electronic registration, and the storage of our digital data. It also is not it's also insufficient without, at number two, interoperability. We pride ourselves in ensuring that we link to the various stakeholders and entities that enable us to register, and one of them is the National Geomatics Management Service. That is the branch within the department that has surveyor generals, so the surveying sector. Our Department of Home Affairs in terms of our ID systems, our South African Revenue of Services in terms of, that is our tax collector, our Bank Association of South Africa, that is to enable our the mortgages. So these are our various stakeholders that we integrate with in terms of the systems that we develop and when we do registration. It's also insufficient without the public land management and information that is speaking to the inventory, the disposal, and as well as transparency. It's also insufficient without land value capture in terms of transfer duties and rates. So these are indicators that provide clear lens through which South Africa also can benchmark itself. South Africa represents a mature, high security, deeds-based jurisdiction that is underpinned by a compulsory registration system that was grounded by the Roman Dutch law. In terms of the legislation, we have our legislation provides a strong backbone by the various acts that we have, which is the Deeds Registries Act, together with our Sectional Titles Act and the Deeds Registration Systems Act. In terms of the modernization and our transforms, we have the electronic deeds registration system that has been operational since the 1st of April 2025. It's being implemented through a phased agile approach. It is a program that is looking into modernizing the deeds registration system
network upgrade, infrastructure upgrade, implementing cybersecurity initiatives, and as well as ensuring that our enterprise architecture is in place as we aim to be world-class. In terms of the current functionality of that EDRS, as we fondly call it, we have a portal that is called Information Provisioning, where the general public as well as our primary stakeholders are able to access their title deeds on a web-based system. We also have electronic preparation, electronic lodgement, examination and execution, and secure digital storage supported by advanced electronic signatures in terms of digital signatures. And we have virtual and electronic payment systems in the EDRS. In terms of the rollout, we are currently running a pilot and a dual environment in terms of the electronic transactions that we are doing parallel to the manual transactions. That is to allow for iterative improvements to ensure that the stakeholder feedback and improvement come back to us, and in terms of risk managed rollout by transaction type. The early results that we are seeing from the EDRS already they indicate a reduced turnaround times in terms of especially the pilots that we are busy with, and the improved accessibility in terms of the EDRS portal, the information provisioning. We are looking to have the full EDRS targeted for the 2030. Alongside legislative modernization. We've experienced that our primary users, our primary stakeholders, as well as the general public, are very welcoming and acceptance of these digital transforms. In fact, they were ready before we were. And as just the benefits that we also are seeing, early in April this year, we had a government building that was housing a lot of government departments. Amongst those, we had our deeds registry office of Eastern Cape, Umtata, that burnt down. Had we not digitized, engaged on the transforms, the impact would have been severe. Thank you.
Good afternoon, ladies and gentlemen. Thank you very much for the invitation from the World Bank. My presentation is divided into 3 parts. Understanding land rights in China, the evolution of reforms to property registration service in Shanghai, and the prospect for future work. As still military in Chinese constitution and law administration and land administration law, urban land is state-owned, while rural and suburban land is collectively owned. Unless otherwise prescribed by law, neither legal entities nor natural persons can hold land ownership in China. Land ownership, whether state-owned or collectively owned, cannot be transferred, mortgaged, or leased. For this reason, Chinese enterprise and individuals pay closer attention to land use rights instead. In accordance with the Article 344 of the Civil Code, holders of the construction land use rights may legally occupy, utilize, and gain benefits from state-owned land. They are also entitled to construct buildings, structures, and supporting auxiliary facilities on such land. Article number 3, number 4, and number 12 of the interim regulations on the grant and transfer of state-owned land use rights in urban areas stipulated the the domestic and foreign companies, enterprise, other organizations, and individuals may, unless otherwise provided by law, actual land use right in accordance with these regulations for land development, utilization, and operation. From an economic perspective, China's land use rights serve the same purpose as land ownership, which is widely recognized and emphasized in most other countries. Therefore, to draw more accurate conclusion, I suggest placing greater focus on the administration and the registration of land use rights in relevant survey concerning China. Shanghai's land and property registration development can be divided into 4 key stages: the year 2003, 2008, 2018, and the subsequent ongoing period. Back in 2003, Shanghai ushered in the digital age for cadastral management and land registration service. Starting from May 1st, 2003, Shanghai adopted a citywide unified information system to conduct land registration and cadastral management. 2 major measures were launched at that time. First, we fully digitized all historic and land and housing certificate, as well as cadastral maps previously produced manually or via standalone computers. A centralized citywide database and information system was built based on Siemens CAD software, which has now been upgraded to ArcGIS. Second, we established a workflow for the synchronized update of cadastral maps and land registration information. If land boundaries changed, cadastral maps would be updated first, followed by land registration procedures. If boundaries remained unchanged, cadastral maps would be updated automatically after registration completion. In 2008, urban and rural planning management was fully integrated with land administration. In October 2008, Shanghai's urban and rural planning and land management authorities merged. The land cadastral and registration information system was further expanded, allowing planning approval, land administration, property registration, and construction licenses to be processed on a single integrated information platform. In 2018, inspired by the World Bank's Doing Business Evolution criteria, Shanghai launched a reform on property registration service. In February 2018, Shanghai launched the all-round online and shared service reform for property registration. First, comprehensive service with a single window, transaction, tax, and registration handled at one window, and shortened the processing time. Transfer registration reduced from 28 days to 5 days. Second, online processing. Apply online with at most 1 visit. The main purpose of the meeting is to sign the application documents, and we also offer express delivery for property certificates. Third, information interoperability. Mutual data sharing to avoid repeated submission. For documents we can access through shared channels, there is no need to submit them again. From doing business to business ready, Shanghai has launched 9 rounds of property registration service reforms. Shanghai has rolled out a host of business-friendly reform-initiated activities, such as we have set up dedicated enterprise service zone in registration halls. Enterprise applications are accepted on the spot, with all documents finished with just 80 minutes. For online processing for high-frequency property registration, an integrated handling of land delivery, certification, insurance, and mortgage registration. After enterprise signs the land transfer contract, banks may process mortgage produced online via the Shanghai One-Stop Government Service Platform, while registration authorities complete mortgage registration in parallel. The Boeing aircraft renovation and maintenance projects in Shanghai, Lingang, finished all pre-construction produced in less than 5 hours. It is the first project in our city to secure land, get official certificates, and start construction all in one day, creating the outstanding buoyancy bid. Provide free one-stop due diligence and ratification service online. It covers properly registered enterprise information as well as planning, construction, drainage, and other related data. Cross-provincial property registration. Shanghai has partnered with Beijing, Hangzhou, Guangzhou, and Shenzhen to realize cross-regional property registration service. Moving forward, aligning with the World Bank's business-ready assessment framework and the goal of building an outstanding global city, Shanghai will focus on key priorities, upgrading online and assisted service for property registration, further expanding cross-provincial registration service, and strengthening coordination with approval procedures in construction and engineering sectors. Finally, I wish to express my sincere thanks to the land and property registration team of the World Bank. Your assessment system has greatly boosted the development of cadastral and property registration service in Shanghai. With that in mind, let me close my report with the core vision of Shanghai's business environment reform. Improving the business environment will never stop. Thank you.
So Klaus, at least somebody likes doing business, and somebody likes Be Ready more than you do, which is good. Thank you very, very much. Over to you, ma'am.
Are we there?
You want me to show the slide?
The what?
You want to have the slide or not?
I want you to show the slide. Okay.
Okay. Okay, I can show. Okay, I have the slide here. Okay.
Just take this.
Oh, sorry.
So I keep moving this one, huh?
Yes, and you move fast.
Okay. Thank you. This is okay. This is my presentation is about paper to digital. Yeah. Thank you. My presentation is paper to digital, assessing, oh dear, Uganda's transition to digital land registry. And I'm going to present outlining the context is on motivation, methodology, findings, challenges, and recommendations. But first, I want to go to the historical context. Well, Uganda had a historical context where we moved from culture, that is, before the colonialists came, we were holding our land under cultural context, where each clan, tribe, we have 60 tribes and many clans in Uganda. So we were holding our land according to our cultural norms. Then when the colonialists came, we went to two-tier systems where the colonialists introduced Milo. You have been hearing about Milo. When they came in, there was a tribe which was very dominant, and they used them to capture miles of land. Actually, Milo is about miles of land. And we got the Milo, and then we got the king owning land, and then we remained with the customary. But as we moved along, before I go there, as we moved, I want to go backwards. No. One more? No. I think.
That looks good.
As we moved along, we got the land, the Constitution of Uganda, which recognizes land ownership, access to land, the Land Act, and There are many other legislations on land. And we have the Land Use Policy, National Development Plan, and the Development Plan 3. Now we are going to 4. And then the Sustainable Development Goals we captured: no poverty, zero hunger, gender equality, sustainable cities, and responsible consumption and production. Are we together? Oh, I'm moving very fast. Land Use Policy, National Physical Development Plan 2015, National, it is repeating itself. It looks fine.
Yes, next one.
Uganda Digital Economic Transformation. Uganda Digital Transformation, we integrated with NIRA, URA, court systems, URSB, national land buildings, and LAVMIS, which is for valuation. Then Uganda, as you can see, it is distributed in that manner. That is the country. The green is customary, and then that orange is where the Milo is, and other land tenure systems are there. There is freehold. Then we have many lakes, and we have, as I told you in the morning, 250. Our land registry was in that form. So we have now moved to the cost of doing business today. You can see in 2012, we were taking 180 days. Oh, the battery is running low. But now, when you want to do registration, you do it in 10 days, if your paper is correct. Investment and company registrations, you can see we have moved, and many companies are now registering land. The transactions have improved. We have moved in 20, your thing is very low.
2020, 21.
2014, we were about below 50,000, but as we talk now, we are over 200,000 per year. Uganda has has improved significant transformation digital systems. We have the National Farmers Registry, which we intend to integrate with the National Land System, so that when the land use is being given, because 70% of Ugandans depend on land, we have land information where investors and all those who support us can support our income generation. We have to strengthen our customary land system. You see, I told you that we have now 14-year system. Actually, Uganda has the most unique type of ownership of land, because 90% of the people own land, but we have to enter the customary certificates of land. You are moving very fast. we have to enter the CCOs for them to be able to access credit. We want to enhance export traceability and support compliance to international standards so that we can export. I told you this morning that we are endowed with good arable land, but because of standards, we are not yet exporting to the maximum. We have to empower gender, ensure that women farmers are prioritized and the vulnerable. You know, we have lame people, we have albinos, and they are always excluded from land. We have to explore land registration for economic interest, enable land banking. Government is buying land back. I told you over 90% of the people own land, but we have to buy land back so that government can invest in land. And we have to, we want to now make a master plan for arable land. We have threats. We have very many challenges on land. I've told you we have digitized land. We have gone to 30%. But now, most of the land which is not yet in the system is customary land, where we have now an application to access it. And I think in 3 years, we can go up to 70, 80% registration. Then people, as you know, sometimes those of you who are Christians know that even when Jesus was crucified, Thomas said, "I can't believe." People still believe in paper. So we have digitized, but we are also making paper. We have dual. When you get your digitization in the system, we even give you the paper one, which confirms, and people go and hide them under their mattresses. So that one we are still continuing to do. We are also cleaning up the quality of the data, and we have an imperfect land market. You know, I told you that we are fighting what we call fragmentation, but our land market fragmentation is forced by the income of the people. People sell off land because they own land, so we are trying to perfect it. We have legislation. The legislations in Uganda were like the RTA. RTA has to be reviewed to keep pace with the digitization and the land use practices. We have to sensitize people on how to use land. So Uganda has still continued at 30%, but we think in the next 3 years we are going to improve. We have land grabbing as a threat. We have the threat of land grabbing from, you have gone very fast. Actually, we have a lot of things we are doing, but we have land grabbing, of course, from oh dear.
The button is even not.
Okay, I can talk to this. I can talk to this, but we are addressing it by building capacity for the people to understand how. And what saved us is that even that unregistered land, people know their boundaries, because customarily you knew your boundaries. But we also have another threat of the population. So we are trying to manage land by telling them what to do with the land. The good thing about my ministry is that the land registration is in the ministry, but the physical planning is also in the ministry, and the land use is also in the ministry. But now putting all that together is one of our biggest challenges, and we want to come to you, our partners, to support us in making sure that fragmentation is minimized and the CCOs are entered in the system. I had a lot. Actually, I had made about 20 pages, but because of the 5 minutes which the chair was giving us, I managed to say that little, but I'll share with you the information online. Thank you very much for listening.
Excellent presentations, really lousy chairing, but thank you very much, all of you, for being here. Thank you so much.
So we have the next sessions at 4 o'clock, and thank you again for all the interesting and exciting presentations. Sorry for the rush, but I think we very much appreciate. And of course, I think one thing to announce is that we will have a hands-on presentation of both the Prosoro electronic auction system and also the land consolidation computerized system on Friday morning between 9:30 and 10:30, and then after that, any case, you will find it on the program, and I think if you're interested, but certainly I think it will be very interesting, and it's a hands-on presentation, so I think with that, thank you very much, and we'll see you at the next session. Thank you.
Okay, I think we should get started. Does the mic work?
Yes.
Hey everyone, we're going to get started for the session. So this session is on housing access, affordability, and regulation. I'll be the chair of the session. My name is Rami Jadvab. I'm a professor of economics from the George Washington University. We're just located 1 block away from here. We don't see university, but the university around here. So I'm going to invite the first speaker, Bernardo Barbosa Ribeiro, who's a PhD candidate from UBC. They're going to present a paper in Brazil. So we'll let you tell us your title. So you're going to have 20 minutes, and we're going to have 10 minutes of Q&A, okay?
Oh yeah, I was gonna ask. Okay, that's great. All right, great. Thank you, Remy. Thanks everybody for coming. So today I'm going to present this joint work with Gabriel, who's a professor at CUNEF in Madrid. Housing assistance is actually one of the most widespread policies in the world, in both developing and developed countries, to provide affordable housing. And then these programs, they usually come in, they come in different forms. So they can be vouchers for people to pay less in rent. It might be the government owning units and then subsidize, renting them at subsidized rates. They can be built by government and then sold at very subsidized rates as well. It might be direct subsidies for people to move to specific neighborhoods. But what is particularly interesting about housing assistance policy is that not only they affect the beneficiaries through the income or asset transfer, but they also induce people to relocate within cities. And then at this point, there's a growing literature on neighborhood effects that are especially prevalent for children. So what it basically says is that the place where people grow up really matters for their long-term socioeconomic outcomes. So these kind of housing policies, they do have, in principle, these effects as well. In terms of evidence, there's a lot of evidence, empirical evidence, on programs that typically move families to the outskirts of big cities. And then, the results are kind of intuitive in a sense that they usually isolate families from the local labor markets. And then this, of course, affects negatively the outcomes, employment, and other labor market outcomes of adults. But there's still very limited evidence on, first, different designs of the same policy. So what happens when you move people to different parts of the city? And especially the long-term effects of these policies, especially on children, right? So we don't know, so there's not a clear connection between this literature on housing assistance policies per se and this literature that I mentioned on neighborhood effects. And so this is what we try to do in this paper. So what we do is we study a large-scale program in Brazil that heavily subsidized ownership. So this is basically the government, coordinating with the private sector for them to build units, and then the government buys these units and then sells them at very highly, subsidized rates to income families. And then to do that, we're going to collect novel data on literally the universe of, hundreds of thousands of families that were beneficiaries in this of this program in more than 600 cities across Brazil. So this is going to be, we're going to be looking at not only these places where allegedly the program placed people in the outskirts of big cities, but like in literally every size and every type of city you might imagine. And then we're going to be able to link the admin data of this program to individual records of education and labor market outcomes of the beneficiaries, both the adults and children. And then so we're going to do two things. So first, we're going to basically try to mimic what the literature does so far, which is estimate the impact of this program on labor market outcomes of adults, mostly in the short term. So what happens, for example, to income and earnings once they receive the new house? And to do that, we're going to use a staggered event study. So we're going to compare people who received the program early on versus people who received the program later on, and then see what happens to their employment and earnings in the next, let's say, 2 or 3 years. And then the second thing that we're going to do, which is the most important contribution of this paper, is we're going to see what happens to the kids of these beneficiaries, like let's say 10, 15 years after they receive their new homes, right? And then to do that, we're going to basically explore the differences in the ages that these children receive the program. So you might think of someone who received the program at 11 years old. They move to a new neighborhood. They have exposure early on to the program versus someone who moved when they're teenagers or almost as adults. So intuitively, we're going to be comparing these two types of beneficiaries. Okay. So a little bit on the program itself, on the context. So this is actually a huge program. So what I'm calling here the Brazilian Housing Assistance Program is actually a specific tier of the program. So this sub-program targeted families living in cities with at least 50,000 people, and then families who are earning the equivalent of 3 times the minimum wage as a family. So just to give you a sense, in Brazil, that basically covers like half of the population. So in principle, half of the families in the country were eligible to this program. That doesn't mean that everybody, of course, got the program. Even within this, subset, a smaller subset of people were the actual beneficiaries, usually, even poorer than this threshold. And then the actual subsidies for, buying the new home were very, very generous. They cover more than 90% of the home price. And then families who received the homes had to pay their mortgage over up to 10 years in installments that are really tiny relative to their income. And then very important for our design here is that they cannot sell, or they cannot use the property in any sense to, let's say, get credit or do anything else until they fully pay for it. And then the other thing that is important, since we're studying, the whole country and literally hundreds of cities, you should be thinking about the same families in different cities literally getting the same product, the same housing. So it has a standardized size, it has a standardized layout, and it has a very standardized quality as well. You might imagine that in big cities, maybe the quality would be better versus cities that are smaller. This is not the case. Like everybody in the country gets literally the same type of homes. And then this program is slightly different from other programs in, let's say, comparable developing countries because there was explicit targeting of households led by female members. And actually, you're going to see in the data that 90% of the recipients of the adults are women, and actually more than 70% of them are single moms. Okay? So in terms of the data that we collected for this program, so there are actually a few data sets. First of all, we have the admin records of the program, so that means we know exactly who got the homes, when they signed their mortgages, and we know exactly where the homes are. And then we're able to link this individual level data with other individual level data sets. So one is the data set that the federal government uses to basically follow the families who are eligible for the cash transfer program, which is a different program. So basically what that data set gives us is the other members of the same household, right? So I get, I know the adult who signed the mortgage, I go to this other data set, I find their spouses, if they have spouses, and I find their kids, right? And this is also gonna give me some measures at baselines, for example, characteristics of the families or basic household composition, demographics, and a little bit of income, although I'm not going to use that here. And then, so for the kids, I'm going to also be able to see if they're in school or not, and in what level of school they are, exactly what grade and their progression. And then for both kids and adults, I'm going to be able to observe them in the labor market. Of course, the adults, I'm going to observe them right after they receive their new homes. And then the kids, once they become adults, then I can track them in the labor market as well. And then once they're in the labor market, I can see their, if they have a job or not, and I can also measure their earnings. For those who know a little bit, this is also true in other developing countries, but when I talk about labor market here, I'm talking about formal labor market. That means, having a proper contract. Usually it's a full-time contract, 40 hours a week. Nothing that I'm going to talk about here is on the informal sector. Okay, so for the adults, basically, as I alluded in the beginning, I'm going to basically split the sample into those who receive these homes in the first half of the program. These are going to be my treated group, and I'm going to match based on age and some basic observables, people who are similar to them, but receive this same program later on, let's say 3 or 4 years later. And then I'm going to do a standard, event study. And then, as I said, the outcomes of interest are formal employment and wages. I'm mostly going to talk here about the extensive margin, meaning if the person had or did not have a job in a formal sector. Once someone has, at least for this population, once they have a job in the formal sector, the wages are very compressed. So like basically, they're expected to get basically the same wage. So everything that I'm going to talk here you should be thinking about the extensive margin, if they did or if they did not have a formal job in a given year. And as I said, I have literally hundreds of thousands of families. So in my sample, I'm going to have a little over 300,000 match pairs of treated and controls. Okay, and then so I'm gonna go a little bit fast here through the results for the adults. So what I see is a small decline in the probability that they have a job in the formal sector up to 3 years after they got their new homes, right? So just for you to have a sense, so these adults, basically like 30% of them had a formal job before the intervention. So this is no more than 5% relative decrease in employment. So statistically significant, but not very big, right? And then basically also kind of following the literature on this type of program, I try to shed some light on whether informality plays a role. So you might be thinking that, once they move to a new home, instead of getting a job in the formal sector, they might get a job in the informal sector. And this is why I see employment going down. What I do is I do the same exercise in places where informality is really high. So chances are that people, might get a job in the informal sector. I don't necessarily see, bigger results. So this kind of leads me to say that informality is not the margin that really matters here. And then the other thing that, of course, these other programs in other countries are shown to do is basically people move away from city centers, and then once they are away from city centers, they have less access to labor markets, and this is why employment goes down. What I can also do here is look at the complexes, at the subsidized housing complexes. They're built very far away from city centers, and what I see there is not consistent with isolation effects either. So basically the conclusion, it doesn't seem the case that people are switching to the informal sector. It doesn't seem to be the case that they're being disconnected from the city center, and this is why they're losing their jobs. So what I argue in the paper is that most likely, this could be a reoptimization of labor labor within the household, right? So basically, the idea is that once you get this huge subsidy, you're paying less in rent, and then you can optimize your hours a little bit more. Maybe you have to take care of the kids, or there's so many things people can do, right? Okay, so I'm not going to talk too much about the effects on the adults. I'm happy to answer questions, though. I'm going to focus now on the effects of the same program on the children of the beneficiaries, which I consider to be the biggest contribution of this paper. So despite the little math here, so again, the idea is that in my sample, in the end, all the children in my sample are eventually going to get the program. So their families, they all get new homes. But some families get homes when the children are very small, and some families get homes when the children are older, right? So then, of course, I include in this regression a bunch of observable characteristics. So the idea is that conditional these characteristics, the actual, the effective age that people get the program doesn't, is basically as good as random. And then again, I have a pretty big sample of children. In this case, almost 400,000 children. And just for you to have in mind, they're going to be treated. So that means their families are going to get the homes when they're between the ages of 11 and 21. And then you should think of the 21 as our quote-unquote control group. And that's because when you're 21, you're too old to be considered a child, and so the effects that you would expect on a child are not going to play when you're 21. So all the effects are going to be relative to this group. And then this graph basically I plot, so each dot is the estimate of the program on a specific outcome. On the x-axis, I plot the different ages. So for example, this first one, the little dot, is the effect of the program on the outcomes of people who receive the program when they're 11. And then in the y-axis here is the effect on the program on the probability that this child has a formal job when they are 21 years old. And then basically what you see is that the younger people receive the program, the increase in the probability that they get a formal job. And then this decreases as you get older, right? And then kind of as expected, when you're close to reaching adulthood, these effects basically disappear and become flat after that. And then one way to summarize this whole figure is just basically to estimate the slope of this line, which is the effect of one additional year in subsidized housing on whatever is the outcome that you're measuring. Again, here, as with the adults, what really matters is the extensive margin. So you should be always thinking about the outcome as having or not a job in a formal sector. And then here, I'm measuring these outcomes at 21, but I can go up to 22, 23, 25. So I've been talking about labor market outcomes, but this is even before. So this is education, right? But basically the graphs, they all look very similar. The idea is that no matter the outcome, the biggest effects are when you're 11 and then they decrease. So this is true for high school attendance, this is true for college attendance, and this eventually translates into the labor market. Yeah. Okay, yeah, so sorry. So this is high school attendance. College is actually mostly flat, so the idea is that even if you're a little bit older, you still get access to the program. Chances are that you actually might end up going to college. And then these are the results on labor market outcomes. And then in terms of magnitude, so for example, college, this population is really out of college. So the average among the people who were treated at 21 is only 3%. So only 3% of these kids would have ended up in college when they're adults. So this is an increase of this is a pretty much big increase, right? And then of course, in a sense, what really matters is once you reach labor market, like are you more likely to get a better job? Are you more likely to get paid more? And then here again, as I said, similar to their parents, less than 40% of these guys are in the formal labor market. So for example, for someone who was treated at 11, a bump of 4 percentage points is pretty sizable. And then, so you see this 36%, this is basically like what that means. Okay, and so a summary of the effects on children is they're more so the earlier you get exposed to the program, the more likely you are to stay in school and eventually reach even college, and then the more likely you are to get a job in a formal sector, right? And then what I do here is basically a few exercises where I break the sample for some of the things that I did for the adults as well. So for example, if they're far close from the city center. But what I really want to focus here is on two types of comparisons. One is even within this whole population, I can look at the most vulnerable families, which are the ones who are eligible to receive the cash transfer, right? So you should think of these families as basically like the poorest in the country. The kids of these families are the ones who benefit the most from this program. The numbers that I'm showing here are basically this summary of the slope of the line. So it's the effect of one additional year of exposure to this program, but what really matters in this figure is the comparison between groups, right? So you can see, for example, the fourth coefficient is basically what's driving the whole result, and this is the sample of people who are eligible to receive the cash transfer. Those who are not, the effects are basically zero on their kids. And then very interestingly, those who move to places where the quality of the school nearby is high are the ones who benefit the most as well. So when you combine these two things, when you target the most vulnerable families and send them to places where the schools are good, the effects on the labor market are the biggest, right? And so, this basically, gives us an idea for, continuing this project, but other projects, but it basically speaks to the fact that, the amenity of the neighborhoods where people go to really matter. In this case, what I'm showing here is that the quality of these schools seem to matter, but you might argue that it might be something else, right? It might be the peers that live in this neighborhood, or it might be the composition of families there. So this is one amenity that we show to be important, but it's not necessarily the only one. Okay, that's what yeah. All right, perfect. All right, that's what I have for today. Thank you.
Okay, great, thank you.
Should I stay and take questions? Or?
Yeah, that's
okay,
fine.
yeah, all right, I'll stay here.
So we have 10 minutes for Q&A. There is a button here if you want to ask a question, so you can have a mic. Please go ahead.
Hello, interesting paper. I'm interested to know why do people living farther from the city center have better outcomes than those living nearby? Because we can think about Miña Casa, Miña Vida, because locating in different places, some are better off than others ones. So for me, if I think about employment opportunities and access to labor markets, etc., I will think about those closer to the city will have better outcomes and not the opposite.
Yep.
Great. We'll take 4 questions. So, more questions? Yeah, go ahead.
Yeah. First question is like it's maybe more a comment, but I would like to hear your views about this. So you motivated the paper a bit like with this Chetty evidence on moving to opportunity, but then the paper is not really, you are not exploring that sort of spatial variation, or you are not thinking about that. You are thinking about, okay, owning a house or being granted housing versus not. And the mechanisms behind the outcomes might be quite different. Next, I'd like to ask you also about, so you mentioned here that amenities matter. So from here I have 2 questions. Like you first showed to us that the parents reduce the probability of formal employment, and then I don't know, I guess I'm missing a bit a link between this result and the following result on kids. Like maybe that means that parents have a bit more flexible schedule in informal jobs, hence the investments they can place on their kids are going to be different, the time investments, and I don't know if you've explored that. And third, and sorry for the long intervention, so it's a large program, so and you mentioned amenities here. One might expect that there are going to be general equilibrium effects, which is something you also remain silent about. Yeah.
Great. Let's take one last question. Yeah, go ahead.
Thank you for this presentation. It's just a question of clarification about the program itself. So the families who get these houses, they choose where they want to go. So because if that is the case, if they choose where they want to go, the sort of isolation effects might not be as comparable, let's say, with programs where they don't have a choice and they get relocated involuntarily. And so that was the question.
Take 3 minutes to answer, and then we'll do another one.
Okay, I'll do my best. All right, so on the last one, so yes, so they're of course, they're not forced to move. It is true that in other programs, people are quote unquote forced to move. Usually these programs have very bad, results. I think maybe the most famous one that we have evidence is the one in Chile during the dictatorship that completely isolated people from anything. So in terms of the population might not necessarily be comparable to these other programs, but in terms of the identification, like what I really care about, for example, in the matched event study, if they have pre-outcomes that are parallel, right? So this might have any impact on like external validity, but I think that's what it is. Yeah. So in terms of general equilibrium effects, that's something that I did think about. There are actually some projects that we have in mind to do that. For most of the cities, like the number of people compared, as a share of the population that actually move is small. But for some small cities, this is actually pretty big. So we have ideas for these specific cities where the program has like a big dent on who moves. But there's not much I can do here. The best that I can say is that for the typical city in our sample, like that's going to be a small part of the population. Okay, so in terms of parents and kids, that's true. So the effects that I see for parents on average, they're not different from parents with kids. So I don't think there's much going on there. It's much harder to track, for example, like spouses and stuff like that, because most of the people here are led by just one adult, right? So that's one thing that we don't have necessarily very clear. What I think is happening is that they are, re-optimizing some dimension. I don't think it's informality, and I don't think it's, taking care of kids necessarily. It might be informality in the sense that, the heterogeneity that I show here is not necessarily causal, so these places might be different. I think there's some more to speak about that. But that's a good question. This is not very clear to us. And then, sorry, I'll take, and then on the amenities. So I think for this presentation, I didn't focus that much on the quality of the school. Like if you read the paper, that's actually, way more important in terms of the story. But it is also true that there are other amenities that matter that we don't necessarily test here. So this is what we're doing for a subset of the cities. We can actually observe amenities for all the neighborhoods in the cities. And then so in that sense, we can unpack these neighborhood effects. But for the presentation, unfortunately, we cannot do that. But thank you for the questions. They were great. Oh, sorry, I missed your question. Yeah. So, okay, so I think you were saying far versus close to the city center based on this graph, right? Well, two things that I can say is that you might think that, for example, the bad schools are not, so the bad schools are far from the city center, or this is some proxy of like the neighborhoods far from the city center are not that great. At least in these dimensions, they're not correlated actually. So if you correlate, for example, quality of the school with distance from city center, these things are completely uncorrelated. And the explanation that I give for that is that usually when we think of city centers, we think about big cities, right? So then being very far from the city center is like, you're completely disconnected from everything. But the typical city here is not necessarily one of these big cities, right? So being far from the city center might not be that painful. So if you think about like a medium city where you can actually go to the city center and back and not be too isolated. Yeah, sorry.
That's right. Let's take more questions.
Thank you.
Yeah, go ahead.
Yep.
Yeah, I have more of a clarificatory question. So, was your regressions done in Okay. So, was the regressions done within a cohort? Like, were you comparing people? So, I was a bit confused that why are you observing negative effects on people who are 19 and 20 years old? So, because that.
Oh,
should
you
be
mean for the kids?
Yeah, for the kids. That should be like broadly a placebo kind of test. Right?
Well, they can be, so, I mean, it depends on why you think about that. So I think people who are like 17 and 18 maybe, but like above that, they're probably the adults or they're closer to the adults that I showed in the beginning, right?
So that those groups shouldn't have any effect, right?
I mean, they could, yeah, they could. I mean, so yeah, it depends on how you see it. So, but I wouldn't be surprised if these effects are actually negative, because for the adults, they are negative. But yeah, you're right. So like both this one and for the adults, we have cohort fixed effects. Yeah.
Oh, great. We have time for 2 more questions or 3 more questions. Yeah, go ahead.
Okay. I was also trying to connect a bit the 2 parts.
Yeah.
So basically, because you said, and this is, I think, quite interesting, that 90% or so of these families are actually headed by women.
Yeah.
So it's actually basically mothers who then stop working or are less likely to work. But then I was wondering, can you check whether it's those families where the mother reduces the labor supply where you see the positive impacts on children, or maybe they're not related? Because, I don't know, I'm trying to connect the two, and I'm a bit surprised.
We did try some of that. So we started with the adults because that's we started with the adults because that's like a little bit easier in the sense that like I can just restrict to the sample that have children. That's going to give me more power, and then the effects on average are not that different. The flip side is kind of hard. So when I do so I mean, so basically all the kids, they have a mother there, right? So like I'm not going to be able to differentiate, families that are very different. But like for the adults, actually, I don't see much of a difference. So we're not sure what's going on. And then again, we could explore. So for example, there are 30% of the adults that do not have kids, and they might have different household composition. But for that, we don't have that much power to do all these things that we do, in a super controlled event study. So this is definitely a margin that we need to improve on. Yeah. Thank you.
We have time for one last question.
So I'm curious about the parents' behavioral response, in the sense that what you document seems to be I'm lucky to be getting into the high quality school area.
Right.
But in the sense that when parents receive such a subsidy and having the home, that might change their behavior. For example, maybe income effect, they might feel they have higher income, or they may have more resources spent to their children. So whether you can explore that part to linking more about these 2 results.
Yeah, so this is what we try to do for the adults, right? So we did kind of the opposite. We try to rule out the other ones, and then we ended up saying that it's not location effects, it's not switching to informality. So it is probably some combination of income and wealth effects, which is something that we see in other programs as well. But there's, I mean, it's hard because there's no definite test for the income effect, right? We have to have some sort of model, and I think it goes back to this question of like what are the members of the household doing, and then of course it depends if you have how many children you have, if you have a spouse or not. So I think that kind of goes back to that question that we need to explore a little bit more. Yeah.
Great, thank you.
All right, thank you.
Let's do a round of applause. We're going to have our next speaker, Shang-Chen Song, who's an associate professor at the University of Florida. Home ownership hinders entrepreneurship, evidence from a housing lottery.
All right. Thank you. My name is Chang Chen. I'm from University of Florida. This is joint work with my colleague, Marilo and Guilherme. We're looking at the relationship between home ownership and entrepreneurship. And we're using a housing lottery in Brazil. So very lucky we have another Brazil pill being presented so that it's easier for me for the institution. There's many things that are very similar in terms of institution, but we have a slightly different angle. So the main motivation is that housing is often the single largest asset in the household balance sheet. And house will have the impact in a lot of financial decisions. In this paper, we're going to focus on entrepreneurship. There's a lot of literature already document that the housing equity appreciations encourage entrepreneurship, business formations, through the channel of collateral constraint. So basically, when you have an increase of housing price, a lot of study in US, then you can do cash out refinance, you have more liquidity, they can use that to support your business. And these research are all focused on existing homeowners. So you already have a house, there's some housing price shock. But much less is known about this kind of extensive margin. So that's what we are focused on. So in the sense that if a household become the first-time homeowner, what's the impact of that ownership on their entrepreneurship and other behavior? So if we think about this kind of hypothesis, it could be ambiguous. So on one hand, they might have more resources, they feel more secure, they use their cash to start business. So then entrepreneurship should go up. On the other hand, if originally when they start the business is because they don't have other things they can get income, so they have to work hard to do some business to get their housing sort of down payment, then maybe this kind of increase of securities will make them reduce their entrepreneurship. So that's kind of the two hypotheses we're having. And that's where we ask this question, in the sense that does the first-time home ownership increase or decrease the entrepreneurship? And what is the mechanism? Is it somewhere along the positive side of the collateral constraint or this kind of a necessity channel? And what's the selection about the people who are being deterred or getting in? Of course, when we want to understand this kind of causal question, the big challenge is identification. And luckily, my colleague in Brazil find this kind of unique setting, housing lottery. So this is where in the state of São Paulo, it's the CDHU program, where there's a public lottery, randomly allocates rewards to the subsidized home ownership for the low-income people. So basically how it works is that in each municipalities, they will start to say, oh, now I want to start a new program in this area with 200 houses, roughly about 440 square meters. And then they will put up a public lottery, people apply. And when you apply, often is oversubscribed. And then on some certain date pre-announced, there will be like a television live broadcast about the lottery process, about which person is getting the draw of the winner and who is not getting in. And then these winners come to apply, and it's highly subsidized. So we got the data, hand collected about 262 lotteries across 223 municipalities. So in the end, we get about 26,000 beneficiaries among almost 400,000 applicants. The NPV for the rewards we calculate, based on some assumptions, is about 6.5 years of household income. These are low-income people. And the collateral channel is shut down, similar to Bernardo's paper, where you cannot make it collateral. And the key identification here is like a randomized control trial, is lottery. So we compare who received to those who didn't receive and applied, and seeing what's their difference after that. The key finding, a little bit surprised when we get there in the beginning, but later we reconcile that, is that these housing received actually reduce entrepreneurship by about 20% in terms of relatively. And this is persistent through the 5 years of the data we have seen. And this reduction concentrate on small entrepreneurs. This is what we call them micro entrepreneurs. And we see that it's driven by the applicant with no formal occupations. Of course, there's something hard to get in. There's something to do. We're going to get there. And we don't see a reallocation of going to the formal works with higher wages. And when we get into the mechanisms, the key thing we argue and we find the result is the necessity channel, in the sense that as housing release their securities so that they start to move back to less work, especially if this work is more necessity. And especially when we identify that, we're using this kind of heterogeneity effect about outside options. The basic idea is that if you have a lot of outside options, when the security is getting up, you can easily move out. But if you are stuck there, then it's not likely. And we indeed see that with the regions, higher per capita income, with more outside options, with some proxies, these people are indeed reduce a lot of this entrepreneurship. And we also, very preliminary, is on the margin about higher end, like a little bit higher income people within this kind of low income group. We do find that there is some sort of opportunistic driven margin. That is, these people are more likely to start larger firms. That's kind of interesting, but we kind of pinned down that part. So in terms of institutional background, this is a program at the state level, not national level. They have done that for like 70, 80 years with more than 550,000 units over the 70 years. It's funded mainly by the state's tax. And of course, there's kind of revolving money getting in from the cash flow of people paying monthly payment. In terms of our analysis, we do this 8 years, 2017 to 24, 262 lotteries, 26,000 beneficiaries. And each lotteries in these cities, they also have different quota. And different quota have different percent of getting it, some for poor people, vulnerable, senior, so that we analyze it all at this kind of lottery by quota cell. So with each cell, there is a winner and there's a loser, so that's where it is comparable. So this is kind of the house, what it look like. It's about, again, very similar, 40 square meter, 2 bedroom, 1 bathroom, there's a laundry, and that's kind of what it looked like in terms of what they receive. And one of the key features here is that the CDHU, they will retain the full legal title so that you cannot pledge, so shut down the collateral channel. And in terms of financing structure, that's kind of exactly what they do, is that based on your household income, you're going to pay the 20% of your household income for 30 years. So you see that the lower income you have, the higher the subsidy, given the same value of the house. And the interest rate also has subsidy. When you pay this 30 years, if your income is between 1 to 5 minimum wage, then there's 0 interest. If it's higher, then it's higher interest. And a little bit more detail on the quota system, but just to point out to you, like this is kind of, they do this bin. They have the general demand, open to all. They have different bands for 1 to 3 minimum income. So people are in that range can apply so that they're in a smaller cell to get the winner and losers can increase, but sometimes decrease their probability of winning. Our main outcome, we'll talk about labor a little bit, but one of the main outcome is entrepreneurship. So this is where we're going to use the mean data in Brazil. And so the key classification we follow, this rule is follow their annual revenue. So we're going to group these companies into 3 groups. The micro entrepreneurs with annual income of 360,000 real. US and Brazil is about 1 to 5, so this is about 72,000 US dollar. And then small enterprise is somewhat below 4.8 million, and large is more than 4.8 million. So this is kind of key outcome we're going to show you later with this 3 categories. So we'll hand collect data with thousands of PDF, so we can get their winner and losers. One of the challenges merge the people, so we use a CPF to link. The main outcome is fairly easy. It's all in the admin data. Entrepreneurship is in the CMPG, and then the employment is in the RIS data. We do some sort of construction and balance. So the key thing at this stage is that we exclude the wait list. So I think there's a little more selection there. So we exclude at this stage. We'll analyze that later. So key thing focus is beneficiaries plus those who are losers. And that's kind of the key thing we're looking at. We do this kind of covariant balance. So as anything about randomization, we want to make sure those in the winners and losers are similar, even it's lottery. And we indeed see for the 30 characteristics, they all very similar. We select some sort of key features here to look at, for example, gender, age, schooling, what's their occupation before they get into the lottery. And if we compare those beneficiaries and those who are not selected, the p-value is always larger than 0.1. So that suggests that it's a balanced treatment control. And we're using the very simple intent to treat regressions. So Y is the outcome. That is many things later, but now starting with the most important thing is the entrepreneurship. Later we'll look at a little bit of employment. And then the indicator is the treatment. That's kind of key causal treatment T. And then we have this fixed effect at the cell level. It goes randomization around within each cell. We have other controls. So let's start with the result. So the first thing is there's no standard errors here. It's just a timeline over time, sort of starting of the business. Horizontal line is years relative to lottery, and vertical line is the new business per 1,000 applicants. So we see average is about 80, so it's about 0.8% on average. So before the lottery they get, the red and blue is treat, red is control, losers. The number, probability of getting into the entrepreneurship is very similar, but after that you see a big drop for the blue, the treatment. And this is persistent, it's not like getting back. It's persistent for the 5 year. We can see that more clearly with more statistical analysis. So event study, getting indicators for each year, putting standard errors there. So pre, there's close to zero difference, and after, then it's negative. So indeed, we showed that the creation of firm becomes smaller. And then we split this kind of business into 3 types. Remember, the micro-entrepreneur is small, large, and look at the effect. And if we look at the micro-entrepreneurs, this is a similar pattern, right? Starting first year, and then there is a big drop of the formation of business. But if we look at the small entrepreneurs or large firms, there's no effect. So that's kind of the first fact. We see that there's indeed a lot of reduction of the business, but it's not a reduction of a small business or reduction for larger firms. So in the sense that, like the common explanation think about the isolation effect and moving around, they should have similar effect on both different size of firm, but not only for the smaller firm. So it's not the explanation. This is just putting that into a regression. Large firms, small firms, there's no effect, and micro-entrepreneurs, there's huge effect. On average, in the first year, the relative effect is about minus 20%. Then we start to look at the occupation. So we see that how is this driven by the people who have jobs or who already have a firm or who have in the informal sectors. So the panel A, B, C are all in the formal sectors, whether you're formally employed or have a formal firms. And we see for the 5 years, it's jumping around, there's basically no effect. And then lastly is the no formal occupation, and this is what result is driven, the most vulnerable people in that group. We can see what kind of industry, and this is what we see that's mostly driven by service and trade industry, but not in some other industry. So that's kind of the first order result, reduction of entrepreneurship in terms of formation, and it's driven by micro entrepreneurs. Now we want to ask, when they stop doing business, what do? They move to the formal employment, do they increase their wages or decrease their wages? We link that data with the employment data, and then we look at this in 2 panels. Panel A is looking at the formal employment. Panel B is about the average salary as dependent variables, and the basic information is there's nothing. There's no clear result about people stop their business and move to the formal
employment or whether the wages increase or decrease. And even we look at the group with no formal occupations, it's the same thing. So it's not like they are moving around. So that's kind of the key result here. And what this suggests is that it's likely, we're still figuring out with some sort of inter-household bargaining things with gender, but it's likely they just stop doing this business and not search for new jobs. So why they're doing that? So in terms of mechanism, the key hypothesis we think is more coherent with many of the results, small firms, and later we're going to show you some other evidence, is this kind of necessity channel. The basic idea is that in the weak labor market, often there will be people who are unemployed, they will be pushed to start small business. And these are the necessary motive because they need to have some income. And to understand this, the key thing here is the outside option or reservation value. So if they don't have other outside option, means that they couldn't find a formal job, they couldn't get any income, so they have to get there. Their outside option is quite low. In another sense, if they're easy to get other jobs, or they can increase their income a little bit, then they don't need to do that. So we can do this hypothesis testing in the sense that if the housing securities increase the reservation value, that's kind of increase their outside options, and it might amplify the effect in the region where there's more outside options, and it will be constrained, it will be attenuated because you have no choice outside. So that's kind of key to testable predictions. And how do we use some proxy here? So basically we think maybe high-income municipalities. We have the data at the municipality level. So we look at the municipality GDP per capita. We look at the share of adults who are employers. We have share with higher educated educations. And the key finding here is that this interaction terms are all negative. This second column, which suggests if you are in that kind of region, the reduction of the entrepreneurship is even larger. So this is where the region where there's more outside option, when you secure, you just move out. While if you're getting some other proxies, we're still trying to pin down what is exactly the better proxies, like a literacy ratio relative for region, you get the opposite interaction term, which saying that in this place, the reduction of entrepreneurship is not that large. Fewer outside options. So it's consistent with the necessity channel. We do individual like gender. Gender also, we see the female is negative and male is positive. It's consistent with the literature about in the developing countries, female is more constrained, have less outside options. And last thing here on this main result is to think about what's a selection effect. If we have shown people are moving out, should they be moving out? What's kind of welfare? We're not going to do it structurally, but just trying to understand if we're kicking out people who have low quality, that's kind of good. If we're kicking out people with high quality, that's bad. So we're using two approach, the Lee bounds to bound the selection and clean 2007 decomposition to look at the marginal entrance. So first thing, if we just plot this kind of performance post-entry, in terms of firm survival and firm upgrading. When we say upgrading, means they're getting from micro to small or small to large. There's no effect. And Lee bounds, we'll see that the higher bounds is always positive and the lower bounds is basically negative. So we couldn't sort of rule out zero in the sense that it's also saying probably those who are selected out is similar quality. And the clean decomposition give us some evidence. The key message here is that the red column, which suggests is about the marginal entrance, these are the people who would come in to start business, but because of our intervention, they're kicking out. So this is kind of a backing out. Who are these people? And you can see that their equity at funding, their firm upgrade rate, their tax violation rate is all lower and then higher. It means they have lower quality. Of course, we see one thing opposite about survival rate and something we're trying to figure out in more detail. But a lot of signals saying these people are more slightly lower quality, that's good. So lastly is this kind of preliminary result about large firms. I have 1 minute, so I'll just quickly speak about that. So that is, we're thinking maybe the high-income people and or in a region they have more opportunities, they are going to increase their entrepreneurs because they are not necessarily people. They are not really have this kind of pressure. So we do the interaction term with gender, with those who have higher firm equity before the lottery and higher development municipalities. So all the interactions positive. And we also interact with this kind of their salaries, pre-lottery salaries, to look at whether they're more likely to start the high equity firms. The interaction term is also high, is positive. So suggesting that in some high-level group on this low-income people, there's indeed a group trying to start more of larger business. Okay, that's all. Thank you.
Thank you. So we'll take 4 or 5 questions. Anyone? Yeah, good.
Interesting paper. When we tried to use housing lottery in my country, Argentina, we found that after the lottery, the bank has a financial screening of the families in order to be clients of or receive the credit or the funding for 10 years, 20 or 30. Does it apply in the housing lottery that you are analyzing? Because if that applies, many people that were beneficiaries will not be part of the program.
Yeah, so as my conversation with my 2 co-authors, so the screening is much less as what you described, in the sense that it's highly subsidized. There's something I put at one point here saying that it's very lenient enforcement. That's what I heard from them. We asked this, is that if they couldn't pay, it's okay. There's 12 months, there's all these kind of negotiation going on. So it's highly funded, less enforcement and they are targeting for the people who are actually between 1 to 3, 1 to 10 minimum income. So in a sense, if a commercial bank comes in, probably they'll reject it. So the screening is much less, but I should know the exact number.
Okay. And I have another question. I don't remember the time frame of your study, but Brazil has been through a very bad economic situation for a great part of the population in several years. Mm-hmm. So do you think that could have affected your results?
That's an interesting thing.
Let's collect questions in case people want to piggyback on questions and so on. Yeah, in the back? If you don't mind coming to a mic. Yeah.
Can you look at some proxy for social networks of entrepreneurs? Because possibly for these really small micro enterprises, they're relying on them heavily to sell products or services. And when they move with the new house, those get a bit harder to get.
Yeah, go ahead.
I'm thinking about the welfare implications of your results. So the dimension along which these people are exiting is on the margin of occupation, right? But I'm thinking more about the skill levels of entrepreneurs who are exiting, right? I mean, we shouldn't really, it's not as big of a welfare loss if it's the low-skilled people who are exiting the entrepreneurship, but the high-skilled people, right? So when you look at the firm-level outcomes, do you also look at the skill level of these people who are exiting the entrepreneurship, or is there some way in which you can isolate those effects as well?
Great, let's take another question, if there's another question. Yeah, go ahead.
I was wondering if you also consider the possibility that these negative impacts on entrepreneurs can be driven by the fact that the monthly payments are always 20% of the household income. So if you earn a little bit more, maybe it's not worth it, especially like if you need to be an entrepreneur for this, because being an entrepreneur is very risky. So it may make sense if the reward is high, but not if you have a high risk to bear, or if you expect a marginal return. But because of how the repayment scheme is designed.
Okay, you can go ahead and take 3 minutes, and then we'll see if there are more questions. Okay.
So first, the bad economy thing. So first, in general, this is
or within municipalities, within winners and losers. So in terms of education, I don't see there is a reason, but it's a good point in the sense that we probably could analyze more about during the 8 years whether there is other heterogeneous effect across the good economy and bad economy that we'll see a little bit more interesting result about the necessity, and because the bad economy is actually enhancing this kind of channel. So that's one thing we could look at. And in terms of the social network, yes, we're thinking about that. So at this stage, of course, we don't have a way to measure directly one-on-one social network. Of course, Facebook could do that. We don't. At this stage, we didn't think about it as feasible. But what we're going to do is that we're trying to trace their address for these people, because we have the access to the labor data or other data, and Brazil have pretty good data, admin data, to link. So if we can trace the address so that we can have a better sense about, okay, if this kind of house, the program they set up, is in the region where there's more entrepreneurs, more small service sectors, or it's not, that kind of variation can give us some sense of spillover. But I don't think we can map a real network along the line. Now, in terms of the skill, we don't have a direct measure of the skill. The key thing is we all measure about the firms they start in terms, anything we can measure in the data about the firms. For example, what's the initial equity? So higher equity, lower equity. What's the survival rate? So these are the things we all exploit, and what in the sense that whether it's capital incentive. But it is something we're trying to get through there. And a lot of things we have been done along the line suggesting these are relatively low-income people and doing more simple service. But we want to think more along the line. And in terms of the 20% income, I'm not sure how exactly. So you want to do high-income people because they are. So I think the model in your mind is that there's some necessity income. So if the 80% is not enough for them for their living, then there is the big drop. But the thing of the treatment is that before they get in, they are paying rent. And the rent is actually much higher than this from our calculations. So we have a simple calculation. The rent they're paying on average is 900 real. And then after that, 3 minimum income household, we're going to pay about 540 real. So it's actually a cash flow reduction there. So that's why I think it's probably hard to go through that channel. And that's also why we are a little bit surprised when we see this first, because we see they actually have a cash flow gain along the line.
All right, great. Are there more questions? We have 3 minutes. Yeah, go ahead.
I was wondering, can you measure the profitability of this micro enterprises? Like, if you have done it, I might have missed it, that are the ones that are less profitable, they are the ones that are closing down or something?
No, we don't have cost. That's the hard thing. Yeah, we can do a little bit about on the revenue side, and then they are all some sort of equal at this stage.
Yeah, go ahead. If you don't mind coming to a mic. Thank you.
Thank you for your comments. There's more questions? Oh, I thought you're changing.
So when you mentioned the selection, because like in the beginning you were using ITT, so it's basically like it doesn't matter if you take up the offer or not. Mm-hmm. And then the selection, you're using just the people who took up the offer. Is that what?
Oh no, can I answer or wait for more? So when we talk about selection in the end, we're talking about there's a treatment effect for people who should start the business without the treatment, but now they don't start it. That's kind of what we see, right? We're talking about these people. I want to understand, these are high-quality people, we're kicking them out, or low-quality people, we're kicking them out. So in terms of welfare, of course, if the low-quality people, they don't need to start business. They doesn't help too much to the general economy. They don't create jobs. It's more their necessity. And if these are high-quality firms, then that's kind of another unintended consequence of giving them home ownership. And then the evidence so far is more pointing to these are the relatively low-quality people. They have more tax violations. They have smaller equities, and their upgrade rate is much lower, 2.1% compared to 7% something. That's where I talk about the selection. It's kind of the people who are selected out.
Great. We can take one last question if there's a question. Yeah, go ahead.
So the people who get the lottery, before getting the lottery, do you know whether they were living in formal housing or in informal housing?
So that's where tracking, but they have to, they cannot have a home ownership. What we don't know is whether they are paying their rent or they live with their parents. This is something we don't know. So that's the cash flow part we couldn't pin down for every household. But in order to be eligible, you cannot have a formal house. And you have to be below 10 minimum income and all these kind of criteria.
Yeah, because I mean, so the question that I'm thinking of is whether, in terms of the applicants, there might be an equal mix of equal probability of people from informal or formal housing applying, but it may be more likely that people who already live in formal housing are more likely to get allocated the housing through the lottery because of some other socioeconomic characteristics. And maybe that might explain whether or not they enter into into entrepreneurship later.
So how to measure formal housing? What do you mean here exactly? Yeah.
Yeah, I mean, that was my question. Like, is there a way to know whether they were in formal housing or in informal housing before?
Yeah, so I can check with my co-authors about this, whether we can know that. Thank you.
Great, thanks a lot, Cheng-Chen.
Thank you.
We're going to have a third paper now by Ruza Carrera, who is an assistant professor at ESP. I always say ESP.
It's French,
yeah.
So it's typically known with the French pronunciation.
It's going to present a paper, Rent Control and Decontrol, Temporary Gains and Persistent Losses.
Thank you. Thank you so much for including the paper in the conference. I'm very excited. So the title is Rent Control and Decontrol, because we're going to be looking at both. Temporary gains, persistent losses. The paper is joined with Michael Abel and Jaime Luque, who are both also at SAP. So, rent control in the policy debate. This is basically the big motivation of the paper. I guess you all know that in response to the housing affordability crisis, which is kind of escalating worldwide, rent control has become, again, central to recent mayoral debates, basically in all major cities in the world. And in fact, both the public and policymakers are, again, starting to embrace this policy. And this is despite, instead, economists are traditionally more skeptical about rent control, because there is already some evidence, both theoretical and recent, also empirical evidence, that rent control can reduce the supply of rental units, which is of course a problem for affordability, can distort the allocation of rental units, and also can have adverse effects on labor market outcomes. However, we still have limited evidence on potential spillovers to other types of markets, such as the owner-occupied markets, as well as in terms of the persistence and the heterogeneity of the effects, because typically these policies are implemented in one single city. So what we're going to do in this paper is to exactly focus on these, and we are going to be documenting substantial spillovers between the rental market to the owner-occupied markets, exploiting the introduction and subsequent unanticipated elimination of a stringent, particularly stringent rent control law. So to give you the paper in a nutshell, we are going to be looking at a rent control policy that was introduced in September 2020 in about 60 cities in the region of Catalonia, Spain. So we leave Brazil for a moment. And after that, after about 1 year and a half, this policy, this rent control law, was suddenly eliminated by the Spanish Supreme Court in March 2022. So it was not a political decision. This is why it was really, really unanticipated, because the decision of the court was really unsure up until it was disclosed in March. We are going to be combining the advertisements on rental and for sale units together with administrative records on all registered rental contracts in Catalonia. So listings, we have them for the whole Spain. When we go to admin data, because of the decentralization system of Spain, we just have to rely on Catalan information. The empirical strategy is pretty standard. We are going to exploit variation over time and space, estimating differences and event study models, and we are going to be documenting treatment effects on both average rents and prices and, of course, the supply. We are also going to provide some suggestive evidence on changes in the extent to which landlords do comply with the law, so with the rent cap, and strategic responses that they put in place to try to minimize the costs associated with the new regulation. To give you a preview of the findings, we are going to find that rents initially drop by about 6-7%, so the policy is successful in reducing rents, but as rental supply shrinks substantially by about 40%, after about 1 year, rents start rising again, so with a kind of U shape, and then they go back to pre-policy levels before the policy is actually eliminated. On the other hand, sales prices fall by 2-3%, with a counterpart increase in sales volumes by 16-17%, and contrary to what we see in the rental markets, these impacts are instead persistent even after the rent control law is eliminated. Following the decontrol, in fact, only the rental supply returns to pre-policy levels, but what we see in the owner-occupied market, so with for sale units and sales prices, instead persists. Let me be fast on the contributions. Let me just stress that the, let's say, compared to the recent empirical evidence on the impacts of rent control, what really distinguishes our paper is the ability to study spillovers to the owner-occupied housing market in the jointly with effects on the rental market, and also the facts that we document. Some of these will be suggestive evidence because, of course, for instance, when we go, as we said, to the informal, to what happens in an informal rental market, we can just, speculate about it in a sense. But a new thing that we do is to document strategic landlord responses, trying to avoid the regulation, the cost of the regulation. And also, we have the rare possibility of observing rent control and decontrol in the same setting. So, let me come to the institutional background to tell you a bit of details on the law, why I said that this rent control law is stringent. Well, first of all, it was introduced in September 2020 and became immediately effective. So also here, little space for anticipation. The law kept rent increases of all residential properties in 60 municipalities with more than 20,000 inhabitants that were identified by the Catalan government as tense housing markets. Why tense? Because either they had an average rent burden exceeding 30% of the average household income, or they experienced a particularly high growth of rental prices in the last years. The law says that the rents cannot exceed either a reference rent, which was fixed by the municipal, the Catalan government, the reference rent of a similar property in the same urban area, or the rent stated in the last contract, if the contract was signed within 5 years before. And then another particular feature of the policy, as I said, is that then this law was declared unconstitutional by the Spanish Supreme Court in March 2022. So it was in place for only, in a sense, 1.5 years. Also, in terms of the data, we do something a bit different compared to the other papers because, again, we combine listings data with administrative data. So in terms of listings data, we have data from the online real estate portal Fotocasa that, together with Idealista, is the leading real estate portal in Spain. So we have all active rental and sales advertisements in the whole Spain. So this allows us to compare, to construct a control group that we argue is better for the comparison with the always treated municipalities in Catalonia. And we have the usual information on unit characteristics that we can use, of course, in our models. We complement this with characteristics at the municipal and zip code levels measured before rent control, so that we can also consider control for some time-varying municipal characteristics, especially to control for COVID. And we combined listings data with administrative records on all registered rental contracts in Catalonia. This allows us in particular, first of all, by combining the two data, to provide some suggestive evidence on strategic responses by landlords. We will see this. But then also it gives us some information that about rental contracts that is, of course, not available with listings. For instance, the contract type, whether the rent is seasonal or long-term. Seasonal contracts are not subject to the rent control law, so you may imagine why we are particularly interested in that information. Plus, we have the information on whether the landlord and the tenant are private individuals or legal entities. So, in terms of our sample for the main analysis, as I said, we have monthly rental and sales ads. After some cleaning, let me stress that in the main analysis, we compare housing outcomes in always treated municipalities versus never treated matched municipalities from the rest of Spain. We will show that results are robust with alternative control groups that exploit only municipalities in Catalonia, just because other papers that look also at these policies using administrative data, this is the type of control group that they use. Let me be quick in terms of with the specification, in the interest of time, because this is all pretty standard. So let me just stress that we can include municipal and year-month fixed effects, so that we are able to absorb differences across municipalities. And we are particularly interested with the given that we look at both rent control and decontrol, we are particularly interested in estimating the dynamic treatment effects by substituting the post-treatment indicator with event time dummies. So let's start exactly from the dynamic results. So when we look at the effects on rents, and as I anticipated again already at the beginning, we see this kind of U-shape. What do I mean? After the policy starts in September 2020, you see that rents start to decrease immediately, pretty much after the introduction of the policy, but then they go back up again before the policy is introduced. And conversely, when you look at rental volumes, again, let me stress that here we are looking at listings data, okay? So this is volumes of rental advertisements. We see that they decline immediately after the policy is introduced, and then the moment in which the policy is then eliminated, they go back up again to the pre-policy levels. So basically, one explanation that we can say of why we see these prices go back, these rental prices go back up before the policy is levied, well, one explanation is because rent control creates scarcity. Looking at the spillovers on the owner-occupied markets, we see that prices decay. They take a bit more time to react significantly, but we see a long decay, pretty substantial, that again continues even after the policy is eliminated in March 2022. And a similar picture, but of course reversed, we observe it for sales volumes, because in fact the moment in which the rent control is introduced, the supply of for sale advertisements increases immediately. And again, it doesn't it stops increasing after the policy ends, but it doesn't go back to the pre-policy levels, as we observed with rental listings. So what we want to do in the second part of the paper, well, first, actually, I was forgetting about the robustness tests, but I already said basically the most important ones, where we show that the results, the shape, and also in terms of quantitative magnitudes, the results are pretty robust to the using alternative control groups. But then I didn't mention that we also check, of course, what's going on if we can confirm our results when we use, instead of listings data, the administrative rent data. And here something interesting happens, because I won't click on the button for just in the interest of time, but we basically confirm the negative impacts on both rents and rental contracts, but we don't see the U-shape in rents. So we don't see that rents of registered contracts go back again up before the policy is eliminated. And we go back to this point in the next slide. So let's come to the mechanisms where we try to make more, let's say, convinced, more robust, this transfer, this reallocation that we see from rentals to sales. So what we do to examine jointly the for sale and rental markets, we compute for each municipality and each month sales to rental heads ratios and price to rent ratios, so that we can basically show that it's exactly in those municipalities where rents go down the most that sales go up. And same with prices. The price to rent ratio at the beginning doesn't change, because of course as at the beginning both rents and prices go down, but then as rents go back up again, prices still continue to decay, we observe that the price to rent ratio goes back up, showing that the relative valuation of owning versus renting go down. These are the costs of rent control in terms of destroying, decreasing property values. We also, provide further evidence of this transfer from rentals to sales, we also show that the composition of listings in both markets shifts towards smaller and lower quality units, and this is consistent with the fact that if from the rental market are withdrawn the larger and better equipped units that are then that then get sold and so enter the sales market, this inflow of smaller former rental units will make the average size and quality of sales properties decrease as well. Finally, going to the strategic landlord responses, this is really where we combine our evidence from listings and administrative rental data. So what do? We take our rental listings and we try to match them. Of course, we cannot link them, but we try to match them, each rental listing, to a contract based on the price, the size, the location, and so on. And what we observe is that the share of rental ads that we can successfully match with a rental contract decreases after rent control. And among the compliant landlords, so among the matched ads, so the rental ads that we can successfully match to rental contracts, the rents stay low. The U-shape disappears. Okay, so this suggests that the U-shape, so the increase of rents before the policy was eliminated, is driven exactly from those listings that we cannot match to a rental contract, and so from those landlords that put the listing but do not register the contract anymore. Finally, we also show, this is only based on the admin rental data, that the share of unregulated and in particular of seasonal rental contracts that are not subject to rent control increases after the law is introduced. Last minute, let me tell you that we try to understand better in terms of policy impact heterogeneity, who gains in terms of the lower rents initially and who bears the costs in terms of lower property values. And we show that gains are actually concentrated at the bottom of the rent distribution. So it's the cheaper units, the low-tier units, that actually see the rent decrease. And in fact, consistent with this, rent declines are larger in less affluent neighborhoods with lower income, education, and renter shares. The costs, so of these lower rents, are borne primarily by private landlords, again, this is the information we get from admin data, the declines in rental prices and supply are driven by private owners. Instead, when we look at the registered contract where the owner is a corporate owner, an investor, we don't see any significant change in price. In the very last part, we try to quantify these gains and losses. We do a thought experiment where we basically compute the pre-policy total value of rents by tercile, and we impute the estimated percentage change from our preferred model. And we find, when doing this, that for different time horizons, renters save 27 million euros over 10 years if rent control had been in place in that pre-policy window that we analyze. If you look at the bottom to the terciles, where rent increases were larger, the savings are, of course, higher. However, when we do the same but for sales, owners lose more than 750 million. Again, just taking the total value of for sale units and inputting the estimated reduction in for sale prices. This is basically to say that this suggests that the gains, so the benefits to renters, do not really compensate what owners instead lose in terms of reduction of prices. Of course, policymakers, it's not obvious that they care about this comparison, but since we have let's say the two segments and we actually want to analyze them jointly, we thought that just to again put some to do a quantification exercise, this was useful. To conclude, in the 0 minutes that I have left, I would just wrap up by saying that we document temporary gains, particularly in terms of lower rents, particularly for low-tier units, but also costs that are large, persistent, even when this kind of legislation is then eliminated and borne primarily by private owners. Thank you.
All right, please go ahead.
Hi, interesting topic. We do something like that in our country. I'm a little concerned about if 1.5 years is enough to assess gains for the population, because I don't know how is the time frame of the average contract, but if, for example, in my country, it's 2 years, so that is not enough time for the renewal of the contract, so all the scarcity in the housing market will not be effective in that time frame. The other thing that I find it very interesting is that, for example, in our country, and in my city in particular, the increase in platform rentals was huge. So that was a type of substitution. They don't want to rent in the formal rental market, but using that was that. And the other thing, the third one, is that there is a pandemic in 2020, which also have affected the housing market in these cities. That's it. Yeah.
Let's take more questions, okay?
Yes.
Go ahead.
Yeah, the first question is what are the effects you see on the temporary or the seasonal rents? Like in the public debate in Spain, that's been like very much what people have been mentioning. That there's been a move from this long-term rent to temporal, like seasonal rents. And the second question is, you say there that gains accrue to low-rent tenants, but do you have a sense of the prices of the new contracts that are signed after the policy is implemented? In the sense that, definitely incumbent tenants are the beneficiaries of this policy, but like the main losers, I guess, are the tenants that, I mean, you never observe the new tenants, let's say, that are the main losers and are typically, I would say, low-income people.
Great. Yeah, go ahead.
Super interesting paper. I guess I was wondering what you think the mechanism behind the continually decaying prices in the sales market is. Is it, people list houses and housing market takes a while to clear, or is there some sort of story about, decaying institutional trust, and so people don't trust the government vis-a-vis not implementing these kinds of policies in the future, and therefore just want to, sell their homes and move on. And secondly, I found the heterogeneity vis-a-vis affluent and less affluent neighborhoods in terms of rents interesting. I was wondering if you had something like that on sales prices as well, where that kind of heterogeneity, whether that kind of heterogeneity existed in sales prices as well. That'd be interesting to know. Thanks.
Great. You can take 3 minutes.
Yes. Thank you for the questions. So starting from the first one, is 1.5 years enough to see the benefits? So it's true that we don't see the renewals of the contracts because as you asked which is the average duration, as for sure it's now I don't have that number on the top of my mind, but for sure it's 4 or 5 years, so definitely much higher than 1.5. But this is why the fact that this law applies not only to the renewals, it applies not only to the renewals, but also to new rental contracts. It means that here each of the listings that we have in the sample is subject to the regulation. Which is not obvious because, for instance, when you think about other types of rent controls, like in San Francisco, they go only for the renewals and not also to new rental contracts. If you change the tenant, you can change the price. This is not the case, so it's true that probably we are underestimating the benefits because we are not observing the whole set of of rental contracts being renewed and updated, but still all the listings that we see here are subject to the regulation. Then in terms of the pandemic, it's true, this is the one of the main issues that we have with the empirical strategy. This is why, in fact, one of the reasons why it's hard, we preferred to consider a control group that considers also municipalities outside of Catalonia, because we know that, in particular, when you think about the impact of COVID on the housing market, the impact on large versus small cities is very different. And in Catalonia, on top of Barcelona, you don't have many others so much large municipalities that are not treated by the law. So for this reason, we think that considering a different type of control group partly addresses for that. On top of that, we control for the number of COVID cases that somehow should capture the intensity of how much COVID hit each municipality over time. Then coming to the effects on seasonal rents, it's true that in the whole Spain there are a lot of papers that look at how long-term contracts have been substituting by seasonal contracts, so the impacts of Airbnbs and so on. Here, in fact, this is why we found this evidence. It's hard to claim that it's really driven by rent control and not anything, and not by anything else. We did check whether we saw some pre-trends that could capture differences across municipalities, and we didn't find any. But more than that, I agree that saying that that's actually, it's probably the least, the type of evidence that I would tend to, trust the least in a way. Totally point taken. Then I didn't really understand when you were saying that the incumbent tenants are the beneficiaries, and when you were instead thinking about who are the losers, and you were saying about you were telling about prospective tenants. To me, here the losers would be the current owners, because here I get to the other question of about the mechanisms for the reduction in sales prices, because here the idea, and when I was talking about the sales the price to rent ratio, the idea is that the value with rent control, the value of owning versus rents versus renting decreases, because if you own a house and you occupy it, then the value of the house, you may argue that you don't bear a cost if the value of that house decreases. But then if you also take into account what would happen if you rent it, then of course you as a homeowner, you are bearing a cost. So for me, the mechanism that I have in mind is exactly a reduction in the value of owning because of the expectation of lower future rents. And then in terms of the heterogeneity across the distribution, we actually, also when looking at sale prices, we actually see something very similar, that the sales prices decrease at the bottom of the distribution, but the differences are much less significant compared to what we see in when studying rents.
All right, great. We have only 1 minute left, so let's see if two short quick questions, but you'll answer them later, okay?
Okay.
Yeah, go ahead.
I'm wondering if you're looking at, if you looked at tenant composition shifts. I mean, if landlords can't screen on price, then they're screening on something else, right? And what about the non-market mechanisms to screen? And consequently, because of that, do you have a sense of whether or not it increased queuing times in the rental market to clear?
All right, one final question. Okay, thank you so much. All right, we're going to have our last paper by Arko Sarkar, who is an assistant professor at the National University of Singapore. The paper is Consumer Protection and Homeownership, Evidence on Developer Regulation in India.
Yeah, thanks a lot for having the paper in the program. So it's co-authored with my colleagues Sumit and Mingjuan from NUS. I'm Arko, by the way, from NUS, and with Pulak, who is at IIM Bangalore, and Xiaoyu, who was NUS student and now is at Sufei in China. So the primary motivation of the paper is coming from the fact that for a household, owning a home is not just a place that they're living, it's also a way to accumulate wealth, which helps them for intergenerational transfer of wealth across generations and so on, and it has been widely talked about in the literature. Now, because housing itself and as an investment tends to become risky, so consumer protection in housing is very central for those households to own these assets. And there has been an extensive literature that have tried to talk about, how to promote housing and how to provide that housing as an asset to individuals, to homeowners, and even today there were talks about, regulation in affordable housing, rent controls, and so on and so forth in providing access to housing. However, there is one important player in the way that home is accessible or home is made accessible is the developers. The developers who build homes across various different countries and who kind of control how much people owns home and so on and so forth. They have been kind of overlooked in the literature and has also overlooked both by academicians in the literature and also by policymakers, and have faced very minimal oversight. And given this premise, what we try to talk about in this paper is, can consumer protection, which is through the regulation of these real estate developers, can that have an impact in expanding and democratizing the space of home ownership in India? Now, what is the primary problem that we think of when we think of developer-owned homes? So what does these developers do? They operate in a pre-sale market.
Now, what does pre-sale market mean? It means that they're not selling built houses that have completely been built. They're kind of selling lands and the idea that there will be properties that will come up in this land or properties that have been half built but will be completed in the future, and that is how they're selling property. So when an individual is buying a property in a pre-sale market, they don't know whether this property will be completed or not. They are just buying the idea that there will be a property up here where I can go and stay in a later date. So that is how a pre-sale market operates, and it is quite pervasive across the world, not just in India, China, but in various other parts of the developed countries like US, Hong Kong, UK. A large part of real estate comes through the pre-sale market. And in India particularly, like the 8 listed developers almost provide 22% of housing. Now what households are doing is they are kind of transferring a substantial amount of money when they're buying a pre-sale property before actually getting access to the house. Now, when these properties are delayed or these properties are defaulted, then there is a big loss that the household suffers. Because the way it operates is when they're signing the contract, they have to give a down payment in the property that they're purchasing. Now, if the household, if the developer delays or defaults, they lose the amount of money that they have paid to those developers when they're buying the houses. And as of around 2023, in India, there were more than 400,000 of such properties that was delayed or stalled, leading to kind of big media outlets talking about how consumers are losing money because of developers defaulting. And these feared that the developers might delay, might default, can deter homeowners or prospective homeowners to come and buy homes. So this is the purview where the paper lies, and there are various articles in news which talks about how housing delivery has been delayed in India, and not just in India, but many other developed countries like in US itself, in Russia, in Australia, and so on and so forth. So the point that I want to make is that this problem is quite pervasive. It's very salient in India, China, in various Asian countries, but it's also quite pervasive in many other countries. So now what this particular paper talks about is we use one regulation in India, which is called Real Estate Regulation and Development Act. In short, it's called RERA, which made a mandated escrow account for developers. What did that do is that now for the developers, for each project that they're making, they have to make one escrow account. So all the money that they are taking as deposit money from the borrower, from the buyers, they put it in that escrow account, and in case they delay, in case they default, then this buyers have recourse to that escrow account, and then they can get the money back. And apart from that as well, they had many other restriction and requirement that I'll go ahead and talk about. But broadly, it gave consumer a broad protection from developers defaulting in their delivery of the properties. Now, the way that it will affect home ownership theoretically is a bit ambiguous. From the demand side, of course, there will be higher demand of home ownership or ownership of property that are coming from builders because there is less risk associated with it. You can kind of buy without the fear that will be delayed or defaulted. But from the supply point of view, it's kind of ambiguous. So now there could be developers for whom this transparency could be costly and they might be driven out of the market. On the contrary, there could be, so that driving of the developers out of the market could reduce the supply of homes. On the contrary, there could be new developers that might be pushed into the market. The reason being that pre-RERA, a developer had a huge reputational cost as a signal to the borrower that I'm a big reputed developer, you should buy from me and I'll not default. So one had to be a big reputed developer in order to attract a consumer to buy a property from them. But now, because of RERA, what happened was this entire risk or entire signaling cost went down, because now a small, relatively new borrower could also say that, your property is protected by the government in itself. The role of this big reputation went down, and this could have pushed new developers to come in, and the supply could increase. So this theoretical ambiguity in some ways is the motivation of the empirical investigation in this paper. And what we end up doing is so this RERA was adopted at different states in India at different points in time, and using this variation in different timings, we try and understand what was the role in home ownership and across what dimension. Now, a little bit on how RERA played a role. It was passed by the federal government, and then the state government used it at different points in time. Now, it aims to promote transparency in the real estate sector, especially between the developers and buyers. Every state were supposed to have a state RERA body where every developers were supposed to register themselves. They had an escrow account, an online complaint platform was developed, strict timeline was done, and even delay or stalling in the extreme case could lead to jail time for developers as well. So it was quite a strict rule, and even in terms of marketing of properties, RERA was made quite highlighted by the developer that, our project is RERA registered, was something that you would see on the hoardings in the street as well. Developers are making a project, it's RERA registered, so no need to worry. So it was quite a salient thing to start with. And if I can't go into the detail, a brief snapshot of what we find is that we do see that housing affordability increases. It increases home loans, which we call mortgage over here, by 4 to 5%, and primarily it's new borrowers who are coming in the market, and borrowers first time, younger and underserved groups are also coming in, probably because when the fear of not getting the property was higher for these borrowers who are underserved, we do see more supply of housing being done, primarily in the affordable sector. And in terms of mechanism, what we think is going on is there is a change in the market structure in the real estate industry, or primarily the developer-led real estate industry. We do see there's a higher probability of developers shutting down or exiting the market. But this is also associated with more new developers, relatively smaller developers coming in the market. And also the profitability of the larger developers slightly going down, while the profitability of the smaller developers are going up. So this is what is going on, and what we think is happening is making these real estate developers accountable and thereby giving protection to the consumers is expanding the ambit of home ownership across various different kinds of borrowers. I'll skip the Indian housing market for time's sake. And in terms of data, we have mortgage transaction data or home loan data from one of the very large public banks in India. We have all the home loans, from which branch it is originated, what is the location of property, and so on and so forth. And for 12 cities in India, we have all the residential projects as well that we can supplement our initial analysis with this project level data. And just to briefly start with the analysis, and it's almost like a relevance condition for the shock to have an impact, we do see that delay in the delivery of houses goes down, primarily in the property that are RERA registered. So the rule was all the property, unless and until it's a single building property with less than 8 houses in that particular building, has to be RERA registered. And any property that was RERA registered, we do see that delay in the properties was going down. It's almost like a relevance condition, that if this law had to have any bite, this is the first place that it had to have an impact, and that is what we are finding. The next, in terms of empirical specification, it's again quite a straightforward usage of the staggered passage. The only thing that I wanted to highlight is we saturate the specification with a bunch of fixed effects. So for instance, we take a branch times property location fixed effect, which allows us to identify the same branch originating loans in the same zip code before and after the RERA was done. So the same branch is lending or lending to one particular zip code before versus after RERA. We do have a branch cross-quarter fixed effect as well, which allows our identification to come from the same branch lending in the same time period across two regions, one protected by the RERA, one does not have protection under RERA. So these are the two basic comparisons that allows the identification of this paper. And in terms of the result, we do find the probability of a new loan origination goes up, quantity of loan that is being originated goes up, total number of loans that is being disbursed, that also goes up. However, we do not see the size of the loan increasing. It's not like one particular borrower is getting a huge pie of loan. We do see more number of loans getting originated, and this is just the time series. We do not see much happening pre-period, and it's kind of going up after the shock. Sorry. Now, one particular test that we're doing over here is that, is it just RERA, or it could be a concern that overall housing market is changing in this particular region where RERA was being implemented, and that is causing the result. So what we are doing is we are grouping our house between pre-sale houses and resale houses. So if RERA is what is the binding constraint in kind of our impact being what it is, then we would only see the outcome in the pre-sale houses, the houses which has not been completed, where consumer protection is required. And that is exactly where we find our results to be holding, that it's only in the new, which means pre-sale houses, that is where more loans, more number of loans are getting originated. But in the resale houses, which have already been completed, there is no requirement of consumer protection. We do not see much effect happening in the resale market. So that is broadly kind of alleviating concerns that it is a broader housing market effect that is driving the result. The next, we wanted to look at what kind of borrowers are coming in. We do see more new borrowers are coming in. It's not like the same borrower is starting to take up more number of houses. And also more new areas, their properties coming up, and thereby more home loans are getting generated towards properties in various new areas. This is again the same trend. And then now we look at what is happening to different kinds of cities. So tier 1 city will be cities like Mumbai, Delhi, Bangalore, that comes to your mind. Tier 2, tier 3 cities were cities in the periphery of this metropolitan cities. We do see that relatively lesser loans are getting originated towards the metropolitan cities, and more loans are being kind of channeled towards the periphery kind of cities, mostly towards the tier 3 cities is where more loans are getting originated, where previously, because of lack of protection, buyers were not willing to buy, and because of this lack of demand, there was less housing supply by the developers in those regions. So the only available properties there were the resale properties. And at the next, we look at the terms of the loan contract. We do see for the new borrowers, the loan to value is going up, the interest rate is going down, even for lower income and for marginalized groups. Also, we do see favorable loan terms. We do see better loan terms for female as well. But this result, I take it with a pinch of salt, because we don't know whether the actual owners are female or whether some male is buying the home at the name of their wife and that is getting captured. So though it is showing better term, but the results, I do not take it very seriously. But the other are very properly measured in terms of new borrowers, income, their marginal cost, and so on. And we do see better loan terms happening. We also do see fewer loans getting defaulted, which we think is because the developers are delivering their projects on time. Loans are also not getting defaulted. And finally, we do see an effect on prices as well. So we do see actually the prices going down. If the effect would entirely be driven by demand, you would think of demand curve shifting outward. You would see both price and quantity would react in the same direction, right? If you just feel that the demand curve is moving rightward. So it is kind of driven by the supply that the quantity is increasing coupled with prices going down. Plus, another effect that is going on is different kind of houses are being built. We try to compare the price as close to the house quality as possible, but measuring this type of housing is pretty difficult in the data. We do as much as possible. So it could be a function of two things. One, more supply, which is one thing that we are trying to push. The other is even the nature of housing itself is changing, which is one finding that we ourselves are observing. Now, in the final bit, I wanted to talk about what is happening in the developer landscape. We do see more number of developers exiting, but this is coupled with more developers entering as well. And these developers happen to be more smaller. We do see that competition in the broader developer landscape is increasing. The HHI is going down in the real estate market compared to other similar kind of industries. And finally, we observe the profitability also going down, but it is going down primarily of the bigger borrowers. The bigger borrowers' profitability is going down, but the smaller borrowers' profitability, in fact, is going up. And I do a bunch of robustness checks, and I'll not bore you as the last presenter of the day with all these different robustness checks. So let me just conclude. What we think is the main punchline of the paper is that when you improve the protection of consumers in a landscape of pre-sale market where consumer protection is required, regulation has a positive role to play, and regulating developers does increase the home ownership landscape, and primarily it brings in the ambit of home ownership more newer homeowners, younger homeowners, and more diverse homeowners. So with that I'll conclude, and looking forward to the questions.
Great, thank you. All right, questions? Okay, good.
Hello, thank you for the presentation. Just two quick questions. With the new act, the RERA, how has it been implemented, the enforcement mechanism? How has it been conducted? Because I was just looking at the statistics and trying to understand the market dynamics of a country like India, which is large. So I would like maybe more expansion on the enforcement measures. Then secondly, the issue of the new act, has it acted as a barrier to entry for new players in terms of the developers? And has it also increased professionalism amongst the developers as well? Thank you.
Great. Please.
Have you been able to explore the differences between states as well? Because that could have a significant impact on the overall results.
Great. Yeah, go ahead.
So I think that it would be quite interesting to explore more about developers. So, for example, if the channel you explain is all right, then there is one of the key prediction along the line is that those who have high reputable developers will be no effect, but the low reputable developers will be helped by this policy. So that's kind of more direct dimension if you can measure this kind of reputation based on the past sort of failed events. And then you can look at more, not only looking at the quantity, but the price effect. So in the sense that I would think about the quantity goes to the reputable and to the not reputable or smaller developers, the gap will become smaller. and also the price, if you can measure the linking the mortgage back to the housing price, the price gap between the high and low quality developers will also shrink. So these are all the things kind of related to the last result, but it's kind of more direct evidence about the market structure change and the pricing.
Great, let's take, yeah, go ahead. Thank you.
I had two questions. One is related to enforcement. Do you have a sense of whether the larger developers are more likely to be caught and detected, and whether that is one of the mechanisms driving why they exit the market and smaller developers build more if they think they won't get caught if they change things? And secondly, if the smaller units are being sold and there's housing affordability, do you have a sense of whether the houses are worse quality potentially if developers spend more resources for compliance and potentially reduce the quality of the materials they use for the houses? Thanks.
Great. You can take 3-4 minutes.
Great, like lot of questions. So, so the first is the implementation bit. I do not have a very structured data to answer how the implementation goes on, but the anecdotal evidence says that a lot of people went to court and got recourse to their money, but this is the best anecdotal evidence that I can provide. There were some instances where even criminal cases were filed against builders. Number of protests against builders went down. So these are kind of the anecdotal evidence to answer both your questions with which had and then next, barrier to entry. It's almost like what we are saying. In fact, barrier to entry is kind of going down for many small borrowers, because if you think of it, your reputation cost, which was the cost of signaling your type, was too high pre-RERA period. Now it's almost after RERA, when consumer is being protected, and the protection is now not coming from your own costly reputational signal, but the protection is coming from the government itself. The cost of entry is kind of going down to start with. So we do see, in line of that, the new borrowers, the new developers, they are actually entering more, and some developers, which some of them were even larger developers, and developers who are not great type, developers who had in the past defaulted, these are the developers we are seeing exiting the market, for whom these costs were much too high. Now, across states, we haven't done much to see whether there was a lot of heterogeneity across states, but we have something in mind that, states where defaults were less, this law might have less bite, but we could do some form of heterogeneity in which states this had a stronger impact. And so in terms of developers, we can actually do quite a bit. We do see that good developers are coming in the sense of the smaller developers who are coming in, and larger developers who had a history of default, they are the ones who are leaving the market. In terms of quality, I think there was another question about quality as well. It's very difficult to measure quality. I probably need a little bit longer time period to know that, these houses that were built are kind of getting more complaints or not. And indeed, smaller units are being sold. The price gap, we do see that the price goes down, but there is a segmented market. The larger builders are more towards a luxury sector of the property. The smaller builders are more towards a relatively more affordable sector. So comparing this price gap would be difficult between the new and the larger borrowers, but we can try and see that if there's an overlapping segment, whether the price gap decreases there.
Great, perfect. We have more time for questions. Yeah, all right.
Have you looked at taxation as a indicator? Because in North America, that is certainly a main factor of housing costs, and the whole pre and post COVID piece that building costs doubled. So,
Great, go ahead.
How did you measure the developer profitability? What was the how did you get that data? It'd be good.
One final question. Yeah, go ahead.
Related, so I saw the interest rate going down, and especially for female. So the price is cheaper, So you try to argue it's all supply side. I think maybe actually just buy different kind of house, right? And I'm not sure whether you said you don't have the data on quality, but maybe you have a type of house sold, to make whether really it's only sales side or actually also demand side. So in the end, right?
Okay, you have 2 minutes. I want to flag that we have a reception just outside, so we can continue conversation just outside after the 2 minutes. Go ahead.
No, taxation is certainly an important thing which we haven't looked at. And actually, I was talking to, he mentioned that taxation is an important thing going on over here. So we'll try and look. So the only thing that might not be happening is that this taxation should be similar across states. So in our cross section, this taxation difference is unlikely to play a role, but still we'll look into that a bit more. Profitability, this Ministry of Corporate Affairs database, which is not just the main province database, but the MCA, which is all registered firms data, they have some form of cost, which is imputed cost and revenue. You can measure some idea of profitability from there. A type of housing, we do see actually affordable, more compact house is coming up, but if you going down, it could just be that before and after RERA.
Thank you again.
Thank you.